Good morning, everyone. This is Rose. Today is October 18th, 1 minute after 9 a.m. Eastern Time. Just going to go through quickly the news items. We have housing starts and permits came out 8:30 a.m. this morning. If you're trading oil, 10:30, the oil report inventory report comes out 10:30 a.m. Eastern Time. And let's see, we have, it looks like, well, like I said 2 days ago, this week is the Fed's week, so a bunch of Fed members are talking almost every day, multiple of them. Around noon, Christopher Waller is going to speak, then followed by 12:30, John Williams and Michelle Bowman will follow along around 1 o'clock. We have Beige Book coming up at 2. Used to be a big thing in the past, but no longer. It's a market moving event. Sometimes you get these weird, especially on a Fed week, you get these strong moves. The Beige Book might generate, but most of the time it's not all that a big deal, but still keep an eye around 2 o'clock. Then around 3:15, Patrick Harker is going to follow along, and the close of the market, Treasury International Capital news come out, but we don't need to worry about it. So you should be wrapping up your trades before the bell anyway. Okay, so we don't have anything for 10 o'clock, but I bet something will come out. So I'm going to get to this. We have a wedge here, so watch out. Okay. We also have wedge here, another wedge here, maybe 1, 2, 3, lower low, double bottom. There was a channel breakout, and we made a lower low. So bulls are trying to get a reversal there. But I want to talk about the daily chart and what is happening. Just give me a second, please. It's the wrong chart. Yeah, okay. Not the chart that I mark. Okay, here we go. So this is still an area of interest. We do have a double bottom. This was not a good buy signal bar. Market comes out and tests, and maybe we do have a double bottom here or wedge, but this area, market is still trying to come back and test. We have already a double bottom, higher high here. I'm sorry, double top, higher high here, but bulls are looking for a second leg up, trying to close this gap, trying to get to the 50 SMA or this trend line. Here is the trend line, which is part of the head and shoulders pattern we have here, and a neckline break. I might be able to, well, no, this is the right way to do it. Okay, so eventually we will get up there, but bears see this as a double top neckline. They're trying to come back down to this neckline area. I do have an outside inside bar. We had sellers here and buyers stuck. They both lower around the breakout point and went up there. If let's see where we are. We are around 43.83. So we're still up around here. Market is trying to get the second leg activated. It already has, but we need to get some kind of a bullish move today. And that could bring us up to 44.50, 44.60 area. This trend line is where I'd like to see market go and test and close this gap. But we'll see. If the bears show up, because that's what they want to prevent this second leg. They see a double top neckline. They want to test this neckline. Okay, it's October 13. And they want to break it, and they want to get below this 200-day moving average. and come back and test this area, maybe even test this area, but I doubt it. I think this gap is going to hold. There's also a gap here and a little bit of gap, but this is the gap area. We might, if we dip, probably buyers, because what we're doing here is the internal structure break. If we do come down sideways and down, market will look for some kind of a support around here and then go right back up. That could create up on this, down on this, up on this, down on this, maybe up again and down. That could create a wedge, bull flag, and we could go right back up to here. But right now, it's basically the Fed's week. So I think we might be getting ready for some kind of a big move soon. We do have maybe head and shoulders pattern here, inverse head and shoulders. We might need to come down, test this area before going up. That could also create a double bottom with this day and that day, and then test of the highs, maybe pull back and go. So there's that possibility. Or we're just going to make a wedge as we get down there. So, but right now the bulls is looking for a break of this trading range. But the problem here is that when you get this kind of move in a trading range, the pullback is deep. We might actually end up coming back a little bit more. If we fail and then we suddenly become bullish at the open, then the bulls are going to try to get back up here and start the second leg breakout. And right now we have a breakout failures, so market sells, but they need a second sell. This is not a good second sell. So either we activate some kind of a sell here, become bearish today, but then we're going to test here. And this is where bulls are trying to prevent a breakout. And anytime there's a breakout failure, we could reverse right back up. So I think it's just a bunch of sideways days we might end up getting next couple of days. And the Friday might be a day that we might either reverse or come back down into this area once again. On the hourly, look at this. We trapped the bulls at the high of last week's range, and we have a very strong reversal, failed breakout, reversal, but it's the first sell, right? So we are right now 43.81. So we're just around here underneath the 66%. We're in a support area. You can see how sideways this is going, but a big range. Market wants to come down and test around here. There's a gap here. I think when I see double top neckline, a big green bar like that, I don't think the bears are going to be able to break this. So we might actually come down a little bit and then make a double bottom and reverse back up. So that gives us some kind of an inverse head and shoulders. So I would look for, say market comes in here, gets back. If we get a really nice buy signal bar, I'm going to look to buy that. I'm going to target these highs and see if we can actually break, okay, this channel from above. So if we do come down then, this area, I'm going to look for a double bottom. So what you're seeing here is a possible bull trap might take place around that invisible trend line. If we do even do a dip, because that would be then triple bottom, or I'm going to take this as a double bottom neckline. Either we fail to break this one, that would give us some kind of a reversal on that trend line, bull trend line. Okay, so I'm going to look to see how market is going to react to this support. If we break it, I doubt it. I think we're going to keep it open, and then we're going to reverse back up. So, but if we do break it, then this area I'm going to be looking for buyers. So it's pretty much a trading range with some kind of a diamond pattern. Globex range, only 20 points, so we're going to get a breakout. We do have a nested wedge going on here. wedge. So market seems to want to reverse, but the problem here is this is a bear flag. 1, 2, 3 wedge bear flag and a strong impulsive bar. So the seller's already selling. Probably some sellers around here. We might get another maybe down, but if it fails, that would be a tried once, tried twice, and we could reverse back up. Okay, so that's what I'm looking for. If we do break, we get another flag here, and the market actually breaks this area, might even come all the way down here, then I would look for a trend line break and then reversal from somewhere there. So right now, this bar closes as bullish as it closes. It's trying to get back here, here, and possibly to here. We could also make a double top there, but if the bulls start strong at the open, they're going to try to get to the Asia low, breach inside, get to the Asia mid, and if we start to close above this area, there is an evidence of selling. This area will act as resistance. We could still get denied, but if we do break it, then we get a breakout, reversal and breakout. So, but we'll see. Right now, I think the market wants to come down more because we're in a really strong trading range here with upper resistance, I found. And we already tested this, so we're making higher low. I'm not sure how far we could come down. There has to be some kind of news to bring us all the way, break this area and come all the way down. I don't know what would play as a catalyst other than the war. Biden is in Middle East right now, U.S. president, with the, I don't know what will come out of there. I think it's not looking good. So that could play a role. You guys need to keep an eye on that. News is, however, we're making a higher low. There is a very tight trading range, and you can see we're oscillating around it. So amount of breakout to the upside is amount of breakout to the downside. We even exceeded that. And we have an amount of breakout to the upside, amount of breakout to the downside. Okay, so more and more. But we're also making higher highs and we're making higher lows. You can see we're in an uptrend in a very broad channel, and this is where bulls are trying to trap the bears. But if we do trap it, finally, we're going to go right back up, and we might actually get above this trend line right here. And if we do, then the next one will be this. Yeah, but we need some kind of a news, obviously. So if we break it and we start to make new lows, right? So you have, let's see, we have to take out this low, we have to take out that low. Still, we're in a trading range. This area, buyers waiting as deep as we could come all the way down to 43.50, 43.40 area. But we have to break this area pretty sharp and get a really good gap from the moving average. I'm using a VWAP here. Generally, when you use a VWAP, this is where the institutionals position their orders. They try to get in as close as the VWAP, volume weighted average price. And but if we start to get gapping and take out these lows, first I'm going to look to see if there's any support here, and then furthermore, as we break the supports, I'm going to be looking for more bounces from down below. But right now we have 1, 2, 3, 1, 2, and 3, 1, 2, and 3 nested wedges. If we reverse, where can we go? Evidence says probably sellers waiting here. We could make a double top and start to come down. There is a trend line invisible. If we break that trend line, we could reverse back down. Okay, that will be the third touch perhaps. Maybe we don't even break it, but this is where sellers waiting. But if we do break, where else can we go? We have to become very bullish when we break this, because once we break this upper Globex high trend line, that means we break this resistance. And breaking that, there's a bunch of gaps here, and the market will try to target those gaps, but we're not there yet. So it's still bearish and strong bull bar. Some bears trying to sell it because they're stuck down here. We might come back a little bit, but I think this bar will need another leg up. So lower low, double bottom, possible reversal with a neckline. Market wants to go test the neckline and get back up to here. Sellers are waiting up here. Yesterday, we're constantly oscillating around is the August low, which is also 4,400, nearly 4,400. So you can see that is a magnet at this point. And market keeps going there. And we're buying below that pretty strong, right? So we're buying, getting above. We had a failed breakout there, but you can see why. I mean, market pushed pretty strong. That was also the last week's high. So it would act as a resistance. But yesterday, we had a failed bull breakout, failed bear breakout. So you have this is a micro triple top. When I see something like this, it's kind of micro triple top. So what the bears will do is they will sell underneath 3, but bulls stuck up there, they will buy. But you can see the bar 4 upper wick is so large, almost it's actually larger than the body. That's a trading range bar, right? So trading range bar. They're selling with the stop up here. That's because this is failed breakout. But the problem here, even the bar 3 is a trading range. There are 2 types of bars. Either you have a trend bar, bears and bulls, or you have a trading range bar with the doji. Doji can be like this too. Okay, these are all trading range. So you don't expect sudden selling or buying at the close. So when the 3 is a doji, right? 2 is a doji, terrible. Bulls needed maybe another, maybe a weak selling bar and then another bull bar. But this bar 3, even though it's a doji, the body is strong. And I see the micro wedge there. So I know that there will be sellers start to show up underneath, but the buyers stuck up here. So their goal is to get back to where they entered, could be there, and then break even. As soon as they break even, bar 4 actually slams down. Okay, so it closes bearish. So now you have 3 bars, 3 dojis, okay, and they're all sell to close with prominent upper wicks. But you're in big up, big down confusion state, so it's a trading range. Is probably sellers underneath 1 trying to prevent breakouts. But at the moment, at the open around 10 o'clock, I am always looking for a double top, double bottom. But what you're seeing here is actually an expanding triangle bull. This is an expanding triangle bear flag. This is one big bear. Okay, so you have this. Now you have a failed breakout, and you have 2 dojis. Okay, no one will buy above that because bar 6 is a trading range bar. So there are sellers waiting above. They try to sell, got back to, there's a reason why 7 ended up testing the bar 5 close, and closer to the low, right? Their bears also trying to break even, but they're disappointed. They cannot activate a sell. And you get bar 8. If you're still short, now is the time to exit. You're not going to try to sell here, try to break even, expect market to come down here. This is disagreement and a failure. Failure of a failure, it's a reversal. So if you get bar 8, you're just going to exit, or you're going to reverse, you're going to take the loss, or you see bar 2 like that, you will take the loss, or you're going to exit out. If you're flat, you're going to buy this bar, and you're going to keep, looking for possibly a measured move. So I don't have this information, obviously, so I have this information. I'm already measuring for measured move. Market goes there, goes beyond the tests that come down. You have breakout, strong follow through, so expect leg or 2 up. Now I can also measure this from here, and that's my measured move. But since the upper wick is so small, I'm just going to use that as my measured move, right? If you buy above bar 8, that's your measured move. And for first half hour, 6 bar opening range measured move right there, or 2 times right there. And the market actually did go test the 44.0450 with bar 23 and started to take strong profit. But let's talk about what is happening here. We have a strong urgency to buy. So this is a contraction to buy again. Market is breathing here. So this is basically a diamond pattern. Diamond patterns can do 2 things. It's coming from down below. It could reverse very strong. It could also break out very strong as well. So what you're getting here is high 1. Okay, so they're buying right there. Stop right here. So you could go for a 1-to-1, initial 1-to-1. Look for a pullback, and you go for a 2-to-1, and that is your 2-to-1 right there. Then it's another contraction, right? So now 3-to-1 and 4-to-1, and the market is going higher. Pullbacks, high 1 is high 2, or you could say this is not a good high 1, because this is not, although the bar closed high, so it's technically it is, but the bears also see low 1 is failed low 2, right? So, and what are they doing here? To me, this is high 1, high 2, high 3, high 4, high 5, high 6, but that's it. So you also have leg 1 pullback, leg 2 pullback, leg 3, or count began here with 22, pullback, I don't know, this is not a pull, I guess it is, or count began here, pullback, and the final leg up. Okay, so you have is, in fact, this whole thing is actually a spike, pullback. So mark that area, because when market makes a wedge top, it's going to pull there. If it starts to close below, they're going to target bar 23 and further down, or a leg 1, leg 2, one final complex leg. They're going to target bar 20, or maybe even bar 17 low. Okay, so let's take a look. And market started to sell. Small pullback bear trend. Strong outside down bar with a very strong close. Just sell underneath. Don't even wait. Don't even bother waiting for confirmation. That's it right there. Just sell the close, or sell 1 tick under. Just sell. Or sell is, here's leg 1, maybe pull back leg 2, or now here's the leg 1, pull back leg 2. That's a spike. So I start the count with the spike. That spike, pull back, right? See what I'm counting? Spike. I'm looking for a reversal. If the reversal doesn't work, and we cannot get above the prior pullback bar's highs, such as bar 40 is 48, we break out. So that's a wedge failure, and the count begins again. Probably, I don't know if we did come down from there, but they tried, yep. So you can see we came back down strong, gap bar, and this is a bear flag, a traditional one. You got 1, 2, and 3 wedge, and at that time, Brad was online and talking about this bear flag. So we sell again, but here's the problem, right? You're selling into, look where you're selling into. You're selling into a gap. So this bear flag failed, right? So you have low 1 here. Immediately they bought it because this is also trading range lows, right? So market tries to get above the 50% of the trading range and trying to test there. Comes back to the 50%. Nobody is selling, right? You get bunch of what do you call barbed wires, right? So when you have, I'm going to talk about the barbed wires, how I read them later on, but because a lot of people are confused about it. So you get this, they're selling, right? So that's the second entry at the EMA. They're entering, but it's not getting a good follow through. Look at bar 74. Maybe it's leg 1 separation, leg 2. So the 74 is a pullback, 1 tick body, and of course it fails, and market starts to buy at the end of the day because it's trying to get back to here. Originally it was trying to break above this because there was a wedge, but they failed. Maybe somebody bought there, I don't know, but they might be buying down here. You can see they're buying. You can see they're buying because they see the gap, bull gap. So they're trying to swing, but market ran out of time. We do actually have inverse head and shoulders with an incredible buy signal bar. So we are is about, I don't know, points quite a bit down here. We're going to open up somewhere here at the low. At the open market, we'll look for some kind of a support and resistance, but this could be also a much bigger double top EMA. Since we're going to open up around here, okay, if we break it, oh, there you go. This is still a bear flag, okay? This is still a bear flag, but flags can fail. However, this one is so close to, that's not yesterday's low, that's the prior day's low. Once the bar 1 closes, low of yesterday will change. We're not all that close here. But there's a gap here. Bears want to close that gap. We might end up coming in here. Okay, so test and maybe look for buyers there. We already broke this. So this is basically a bear flag at the open breakout. Okay, so you see, so it's probably wants to come down a little. Alrighty. We'll see. I don't know how this bar will close, but it is bearish at the moment and there's room to downside. We might need to test thoroughly underneath the 50 EMA on the hourly chart. Bulls, however, want to start buying and go up to that trend line on the daily. We are in a trading range low, closer to the trading range low. There's a gap here. We need to test this area. I think market wants to test this area. We might find some buyers there. We're oscillating around above and below 4,000, so we are in a trading range. There is a trend line. This is obviously a bear flag expanding. Triangle bear flag. bears are trying to break it, they're going to have to close a bear bar below that. But because they're selling into this gap, so the next target could be this high. We might dip under it and then trap the sellers and reverse back up possibly if the bear flag fails. It already broke out, so I don't know how much it's going to sell. Market is always looking for support and resistance at the open. They might be seeing this as support, but we don't know. Bar needs to close. Bulls are trying to get a second leg up to the moving average on the 15-minute chart. We just tested the 50 EMA, so that's support right there on the hourly. Okay, there you go. That's your support. 76 low is probably target. The earliest. That's a neckline. I said we might actually end up testing the neckline if we do not break, but I also said the Asia low we will test. If we do close above Asia low and take out the neckline, which is right here, the center of my pointer, then we go up here. But we need to close not only the 15-minute bar on its high, we also need to get a second bull close on the 5-minute chart. That would become a trend from the supports, and that could bring us to possibly 76 low and then further into the moving averages. So there's a trading range here. Bulls know that this bar could trap them if they buy at the high of a trading range. Bears probably waiting there looking for a double top, trap and bring it back inside the trading range. So the how bar 2 closes is a big deal on the 5-minute chart. You'll know whether if the bulls are going to go higher or this is going to be a trap. So I did buy and quickly scalped, and my buying was solely on this setup, right? So we have, I didn't sell because of these bull bars, right? So this was low 1, but we made high. They tried to sell and get a low 2, failed. Instead, I put a buy order right there, not here. I don't like to buy above bear bars. So I entered, and at the high, I took profit. It was also 10 point, I think. So, sorry. Yeah, so I took 10 point profit around right there as it got closer. Scalped and out. So that was a quick trade, but because it's a trading range, a bar like this is extremely risky to buy because it is designed to trap you. And you see what's happening? Where's the bulls? Where are the bulls? It's not there. So it's trying to, it's always looking for a support and resistance, right? So we could still get to the 76 low, but you need two bull bars. So here you go. If this was too low to sell into the support, then this was nothing but a pullback, and the bears want to now take out the bar 1 low. So there might be some buyers underneath bar 1 low because we have overlapping bars now. So we have 2-bar trading range. Stock bulls, I exited, but if nobody else exited, they're going to try to buy somewhere here, and they're going to, with the bounce, they might exit, and we might still come down. So you see how bar 2 is now bouncing up and down as it gets closer to the bar 1 low. So some bulls are already buying the lower third, but I think it's going to try to exceed the bar 1 low. Try to test yesterday's bar 3 high, because there was a supply there before. Okay, market is trying to get back there, trying to go 1 tick underneath 78.25. We're just testing 1 tick below that bar 1, so you could see some buyers started to buy because they're desperately hoping that this would go to go around here so they can actually break even. You can see how that's going up. And that's the reason why. Because of the stock bulls, they're desperately trying to exit because they're disappointed. And they know now that this could be a pullback. So basically, you're trying to jump over, right? Maybe, whatever. You're trying to jump over. You're not going to, oh, yeah, I'm right here at the edge, so I'll just jump over. No, you back up, get some, speed, right? And then you jump. So the pullback is like that, okay? So the pullbacks, they need a better price. So no one's going to get a better price if they're selling so close to the support, okay? So it's going to back up, and then it's going to find sellers, and that's it. So this is where I use those 10 point, 15 point, 20 point to see if they're going to be able to get follow through after profit taken. If not, you have to exit and you sell. So now you have a measured move target, possibly 3-bar measured move, only if the bar 3 closes bearish. They already sold the close of a strong bar. The problem selling the 2 close or underneath 2, there are buyers there. This is 2 overlapping bars, so it's trading range. But it's so strong, there will always be sellers there because they know with that bar 2 going up like that, some bulls already exited. So sell the close. If we close this bar bearish, bears will try to sell even more into that measured move target. But it is the support. Bears need to break this and close a bear bar below the 78.25. We're also breaking a trend line. Suddenly, if we close a bull bar, then other bulls are buying and they want to bring market to the 50% pullback of bar 2 range. Bears, they do see a target is around 43.75.50 to 74.50, but they need a bear bar here. What happens if they cannot get a bear bar? Then they don't get a bear bar. That means, I explained it's a 2-bar trading range, buyers down here, right? So we could end up moving up before selling again. Bears trying to get a trend from the open because they see a bear flag and they want to break this trend line with a bear body. Bulls want to trap the bears, bring it back up to the apex. But how 3 closes could create a bear pressure. How 3 closes could create a bear pressure. We're also now slightly below the open of the week. Open of the week is basically bar 2 close. So we're slightly below. If we close a bear bar, we could continue to come down. So we have a double top there, double bottom here. If we break the Globex low, we're going to follow through and get that measured move target. Double top there, double bottom here. If we break the Globex low, we're going to follow through and get that measured move target. Only if we close a bear bar. So it's a good breakout so far, but needs to close a second bear bar on its low as bearish as possible. If we don't get it, then we could go right back up to the open of the day. This is bearish so far from yesterday. But first two bars are overlapping greatly, so that makes it difficult, and that's why this bar is going up and down, up and down. Two bars are overlapping greatly, so that makes it difficult, and that's why this bar is going up and down, up and down. Bear's trying to close as low as possible to get a follow through. Okay, so that's a follow through right there. Bears want 74.50 test. Some sold close. Some sold close. That's a breakout. But so far, bad follow through. It's a breakout. But so far, bad follow through. They want the 43.75. Testing the breakout of this breakout test area. Some limit sellers above right here. So they're selling because they see a breakout, but a bad follow through and a kind of trap underneath this breakout test area, but they did sell. Market, this bar just came down very quickly. I don't know if I want to buy here, to be honest with you. I'm going to wait for this bar to close. But as is, it's trying to get a failed breakout and a wedge bottom and a reverse back up now. So back to open of the day, due to bar one, bull stock. Bears didn't get even a 9 point here, so probably sellers here. Depending on how this bar closes, many bears will exit. If it closes strongly bullish, they might exit. If it has very little upper wick, they were looking for at least a 9 point scalp around 75.50, and if they see a big failure here, they will exit out because it's also wedge here. So, but if it closes with such a big upper wick, then probably sellers, they're going to push price back down to 75.50 to 74.50 again. So it's a trading range open, slightly trending. Bears are still looking for limit order. Bears entered here, so they're still looking for 74.50 test or 75.50 test. Bears need, okay, so really large upper wick, but it's a trading range bar, and you can see. So some will try to sell the close of that bar and try to get follow through into 75.50 at the minimum. But as soon as we close a bear bar or take out the 3 close, then bears can still accelerate. But if we get another bull bar, look, they're selling the close of 4. Okay, so that means they want to test the low. There might be some buyers here. They were bears stuck with the close of 3, disappointed. They sold higher. Now they sold the close of 4. They want to close this bar as low as possible, below the 3 close, bar 3 close, then they can get their target at 75.50. But if this bar closes bullish, many will exit. If it closes bearish, they will continue to sell. They will not exit their shorts. But if this bar closes bullish suddenly, last minute, there's still 3 minutes and 40 seconds. Okay, so let's see. Target is still 75.50 to 74.50. There's not yet good buying here. But if we get a bull bar, that's going to be a problem for bears, and that's going to be the second time they're trying and failing. They will exit very quickly. So I'm looking for this bar to close bearish as possible so that we can get a follow through and test those 74.50, 74.75. Right, there's that problem too. So we have a wedge here and we don't have a bear close yet, but if we get a bear bar, we will continue coming down. So this is actually a bear flag. If we actually get a strong bear close, like an impulsive close, taking out the 4 low, they will sell. The buyer is waiting probably under 4 as well. That happens to be a 14-15 point swing target, 14 point being the 74.50, 15 point being the 73.50. So we're going to probably try to test that area for bears. But another reason why this is struggling, this gap here, okay, which we talked about. Bears trying to close that gap by testing at the minimum the high of yesterday's bar 7. Okay, so, and the open, I don't know if we're going to be able to get to the open of 8, but that brings us to the measured move target. So that's a micro double bottom, but still there's 30 seconds for bears to test. And if they fail in 20 seconds, closing a bear bar, then we get a micro double bottom and a triple wedge, and then we go right back up again. So some bears, again, trying to sell here, sell above 5 or sell the close. But I wouldn't, because look what happened here. We get a micro double bottom, and bears totally failed for the second time trying to sell. So I'm done selling, basically. Once I see a second bar close bullish, I'm pretty much done. I no longer expect. That failed right there. So failed breakout for bulls, failed breakout for bears, and the market now is trying to get back to an above open of the day. There might be some sellers at the 50% pullback of this, but this is not a gap bar anymore. So market is trying to get back to the EMA, but there will be sellers always there at the 50% pullback. But if we start to close above it, we could end up going right back up. So they're still trying to prevent open of the day breach. This would have been too much of a pullback for me. Okay, so I exited. What if they close a bear bar? That will be a double top bear flag under the EMA. I don't know. I need a bear bar. I can sell again, but I need a bear bar. This would have been too much pullback. So if you have a small account, what are you going to do? Your stop is up here. So you have to figure out if you sold maybe here. Okay, it's not a good place, but that's more than 10 points stop, right? Or if you sold right there, right? Or that's still nearly 10 points. I cannot take that risk, okay? So I exit it. Now, if they close a bear bar, I'll get back right in. But this, to me, bar 5 closing like that, it's just too much. So, but it's, not all that strong buying. So the bulls need another bull bar here, preferably closing on its high to bring the price back up to 43.85 area. If they fail, we get a double top. So it's barbed wire, double top, double bottom. So you have to give a little bit of space for price to test that high and test that low, and then give you a confirmation breakout bar close Until then, it could go sideways, up and down, and trap you. Okay. It's kind of a breakout mode with an inside bar, an outside bar, or inside, outside, inside, 3, 4, 5. It's going to try to break out from somewhere. Sellers are trying to prevent a bullish breakout above a trading range bar 4. So, but bears trying to get a breakout from the 4 low. Sometimes it's better to stay out of this until you get a decent, strong bear bar if you really want to keep selling this. You see something like this, you have to preserve your account, your funds. Unless you have a big account, then you can sell up here again. Look, we've gotten very close to the, look, it was 33%, lower 1/3 of this big trend bars, so sellers were there. Didn't even get to the 50%, but I explained a couple of days ago where you would put your limit sells if you want to sell with a pullback, and that's where they showed up, above the range bar. You either get a trend bar or a range bar, right? So they sold above the range bar. They tried to first sell the 4 close because that's a barbed wire. You always get that, okay? Because people are stuck here. So it comes down, and if it closes higher, you exit out because that means we're going to go and test that high, which we did. So now market is trying to, it already has a double bottom, it now has a double top. It's trying to figure out which way to go. If you get 2 bull bars after a barbed wire, 2 bull closes, they will buy it. In fact, they will buy the pullback as well. But if you don't get 2 bull bars and you get 2 bear bars, then you're going to sell it, okay? And then you're going to sell the pullback as well. So we don't have that because this barbed wire still continues. And if you don't believe me, you can find a barbed wire example, such as, let me see if I can find one from yesterday's price action. There are a ton, but not the examples I want to show. Here. Okay, so they're getting a follow through now, you see? I want to show you guys the example of a barbed wire and how I trade them. I try not to. Okay, so for example, yesterday, I'm going to do this quickly. Okay, so take a look at bar 16, right? So you have barbed wire, right? They immediately sold the close. So this area is basically barbed wire area. So they sold the close because there are sellers stuck here. They sold the close, it comes down, gives them a relief, then goes back up. It's also tight trading range basically with bunch of upper wicks and lower wicks. That makes it a barbed wire. It needs to make a double top and a double bottom. Double top, double bottom. Okay, so then for the bears, this is now trading range. You can buy a strong bear close. Probably sellers above here also, right? So, but this is it, right? So the bears sold, bulls bought, bears try to sell again, but there's no consecutive bear bars or bull bars until here. We get a really strong bull close. And then you got the breakout. What are you going to do? You can buy, they bought it, they will buy the pullback as well because that's it. It's now getting a breakout. Let me see, there's another one. There's another one right up here. Double bottom, double top, or double top, double bottom. So it's going to expand. So what it does is You get a bunch of wicks barbed wire. It extends, goes to the equilibrium, and then makes a decision. You get a big bear bar, you sell. Especially if you get two of them, you sell the pullback and look for a swing. If you get a strong bull bar after double top, double bottom, right, and breakout, you can buy. But if you get two, now you're looking for a swing, you're going to buy the pullback as well. So what happened here? Here is your barbed wire, right? This is not a breakout, but they bought the first breakout, but you're all the way up top. Not a good idea, right? So what it does is it goes up. Now it needs to come down and test the low. So extend that box. What happened? They got stuck there. Now you have two bear bars, right? So they're going to sell it. They're looking for a swing. What do they look for? A pullback. And an impulsive bar, sell that again. You're in a swing. So this is how institutions trap you in barbed wires. Many people don't know how to trade them. Like you have barbed wire right here, right now. Very dangerous. You see something like this, just stay out of it. I mean, it's going to trap you. Okay, so you got a double top, you got a double bottom, double top. Okay, we're tested the double bottom. Now bulls want to test the double top highs. So you can kind of get the idea. This is not a good close. Get rid of this. This is not a good close for bears. We might have already tested the barbed wire lows. They're now trying to test the barbed wire highs. So this tiny trading range is expanding. In that process, it could actually go up and test, trap the bulls, and make a wedge bear flag and come back down again. But you need a good bear body. Now, if the bulls actually close a strong bull bar, they can get a breakout as well. But you need the confirmation. Where's that confirmation body? You don't have one. 7 is definitely not in confirmation for bears. It's a doji. So you can see that this is bear flag could be failing. We're at the apex, so that means it's trying to get back up here. And if we get a strong bull bar, that could be the confirmation to break out. If you get two bull bars, okay, say you got something like this, another one, you can buy the pullback for a swing perhaps. But as you locate them, you're going to be getting aha moments. You're going to be like, oh, I see what's going on here. Rose actually showed me this, and I kind of see what's going on. So, see, that's trying to become a now confirmation bar for bulls. What happened to here? Well, I'm done with it. But we did reach my target, though. I said bears want their target reward, 14 to 15 point swing, 74.50 to 75.50. I'm sorry, 73.50. Look, we actually tested 72.50 because ATR is so big, it's overshooting. But needless to say, it closed a huge bar, so no one's going to sell anything here into the 20 point. So we go higher. So it's tight trading range. We trap the bears. Now we go up high. It's a trading range highs we're testing. Bears want a double top and a failed follow through and a failed breakout and a failed follow through, and they want to bring it back down. But if they close the bar really bullish, and we get a follow through breakout, another bull bar, they will buy the pullback, especially if we close above EMA. Market is trying to set up always in long here, but we need this bar to close bullish. So why is this bar coming down other than the test of the barbed wire trading range highs? Why is this coming down? Why did it go all the way so strong and then suddenly started to come down? what's going on here? Other than trading range highs, we know that. It's because their machines are counting. So they're taking profit. The upper wick is profit taking at 15-point swing. If they do close a strong bull bar, these bulls will try to get a follow through into the 20-point above. That could be around 91.50 to 92.50. Yep, Frank is right. What happens if we get a bear bar? Well, I said with barbed wire, we have to test the highs and the lows. We tested the low. We tested the high. We now have a bad bull close, right? It's not all that wonderful. So what do you think is going to happen? That's a failed breakout from the outside bar 4's range. So the bears want to test the low of 4 again and try to get a breakout, but they're going to have to close a strong bear bar here. So what is this now? That's basically a double top at the EMA around 10 o'clock, 10:15. If we get a bear body, then I'm going to look for, okay, a good bear close and a follow through, and then I'm going to look for a pullback and sell again, only if we get that. So I don't know. It's still a confusion. It's basically a wedge bear flag. But the moment we get a bear bar, that's going to be the confirmation for bears. So this barbed wire extended, but it is following the process. Process is very simple, right? So it's double bottom, double top, test the double bottom, test the double top, come back to apex. There's no confirmation bar for bulls. Where is the strong bull bar? So you had to scalp. You're in a scalping environment. Okay, now we have a double top. If we get a bear bar here, really strong bear close, they will try to sell that. But where is that bar? I don't see that one either, so it's better to stay out of it. It's basically a 1-bar tight trading range, what you have right now, and it's a very difficult. This is where the institutions are trapping each other. And we're going to get a direction eventually. One of the hardest opens, I think. So let's talk about is bears. So they try to sell, right, and failed. They're trying to sell it for the second time. This is, to me, it's difficult. But one thing, I mean, I could take this. We have no, if you now adjust your trend line, where is the bear bar? I don't see a bear bar. I don't see a confirmation either for the barbed wire. So it's tough. So maybe step aside until you get a good direction here. It's a wedge bear flag. Some selling underneath 8 in a tight trading range is kind of dangerous, I think. But if this bar closes bearish, bears might get a chance. But if it doesn't and you sold underneath 8, you're going to be trapped. So just sit tight and wait. Bulls need to close above open of the day to become bullish. 5-minute EMA and 1-hour EMA kind of parallel to one another, but the one thing that is going for bears is that we're bearish. So they're looking to sell the pullbacks. Okay, so EMA is a great place to do that, but we now need a bear confirmation bar. Bulls trying to trap the bears, hence is bar 9 low. But if we get a bear body closing below 43.77, we could get finally selling, but I mean, this is nothing. What if we get bulls actually close above 43.80? Then the bulls will show up. So 43.80, look for a bull close. One or the other. If they get this bull close, I'm sorry, 81, I'm wrong there, 81. If we get a bull close above 81, we become bullish. If we get a bear close below 77, we become bearish. So I have no confirmation, but it seems to be trying to get to open of the day and close above it, but I just need this bar to close in 2 minutes and 22 seconds. I look at it as size of the range doubled. You can see that's a big gap down. This is not a big gap down. It's a gap down, but it's not a big gap down. Institutions, I said, we're probably going to enter at and around the VWAP, right? And they have. They sold. They need a bear body to swing this down. They're not getting it. So this is a trading range on a higher time frame. Bears didn't get a confirmation. We're above 81. Next target is 36.25. I'm sorry, 86.25, and we already breached it. So now, oof, I can't even count. It's going. I went long with this bar. I hit buy. I want a little bit more follow through into 43.92. Let's see if we can make it. And it closed this gap, maybe test of close of yesterday. But because these EMAs are going parallel, bears will try to sell a strong bull bar close somewhere at and above the 21-hour EMA. So I'm going to scalp 92. If it gives me, there might be buyers. That's a breakout pullback. There might be buyers around 88.50 wanting to buy. They're going to try to scalp 92. We might get a follow through into 95, 43.95. So I'm going to hold this long. So I'm looking for a 95 test. But first 92 scalp. But we should get a follow through. ATR is so big, we're probably going to overshoot to 92 and get a 3-point into 94 to 95 area. We might even overshoot that into 96 to 97, but we will pull back there. So I'm looking for bulls to push this higher to 80 low, close of yesterday, but really 95 is where I want to see bulls actually test. So we need one more bar here for a breakout. We need this body to close bullish to get a follow through. And the bulls actually do close a bull bar, then we could get a follow through at and above the hourly EMA and the 95 test at 95 or slightly above. Some sellers probably waiting. But what did I say about this area of interest? I said first, we will test the Asia low, which we did, got a rejection, try to sell, got a rejection. So you got a failure of failure, that means reversal. We get a reversal, I said, back into the area of interest. If the bulls actually manage to close above these two price labels that I marked, I always mark every day, we become bullish and we try to swing to these prior highs. Okay, so that's what they're trying to do. They're trying to close a bull bar above the 91.75 and 94. So therefore, we're probably going to test the 95. But we need a follow through after this breakout. Barbed wire, here's what I do. I generally sell the close and sell higher. And if there's bear body like that, I try to buy the close or buy lower. Okay, so buy the close or buy lower. And that's what's happening. Especially if they're doji with really big wicks. So you can see no confirmation for bears, no confirmation for bulls, but finally we have trapped the bears, and that's actually a inverse head and shoulders with a strong breakout neckline. So we need one more bar to get a follow through here. So this bar, it would be ideal if the bulls can actually close a bull bar here and get us to the 43.95. It's the Asia mid and US midnight open. Green is US midnight open, midnight 12 a.m., which is green. Yellow is the Asia mid-range 50%, which kind of presents the market is either trades below or trades above. If it trades below, I look to sell with good bull trap bars or double tops and whatnot. If we're above, I look for double bottoms and good strong bull bars. Closing, I will buy and try to get to the next magnet, which I generally mark probably sellers above, and the market is trying to reach there. All right, so we have a breakout pullback, a second bull bar, not a good sell signal bar, 11, probably buyers underneath. I don't like the way it's coming down, obviously, so there will be buyers at the 50% or 33% pullback of this big gap bar, and they will try to buy the pullback and try to break even at the minimum. So if I measure, it's trying to come down to, it's already 33% pullback, 66 is 33 identical, so it's still trying to come down to 50, probably more buyers there. So what do you do if you're disappointed? Breakout, you got a follow through bar, and then suddenly this. It's pulling back to the 50% of this tight trading range. There's got to be some buyers here disappointed who bought maybe one tick above or the close, buying at the 50%. They want market to come down, come up here very quickly so they can break even or test the low of this bar. So I'm looking to see if we're going to actually bounce into that pink area, but as low as they could also buy right here. Okay, so there are buy orders also right there above bar 9. This is the break even, but as they add more, this is a 10-point pullback for bears. ATR is too big, so you're going to get big bars. So basically it's telling you your average body size could be 7.5. Okay, so we got a lot more than that. Or it could be double the size or 1.5. You're already getting 1.5. Double the size, that's 14, almost 15 points, right? So it's telling you that's a 10, that's 1.5. So it's a 10-point pullback. So when you look at the ATR, or you don't use ATR, it doesn't matter, but you have to constantly measure the bars to see how far these bars can move up and down. That's why I use the ATR. So people are always asking me, remember what L says. Find the average size. Look how big this bar is. Now it's coming down. Or measure the range. Market is going to upset you. So what happened? Why can't we go up? Well, first of all, these bars are going sideways. I did warn you. I took profit there. I'm looking for follow through. I'm always looking for follow through. But I said, because this is first breakout, this is good, but it's doji, but it's still the second bar. So people are disappointed. They bought it. They're probably going to buy the pullback. But now this is getting very excitedly big. It's going to the 15 point, double the ATR, maybe 16 even, right? So you're not going to buy while this bar is happening. If you do buy, you have to be prepared to buy even lower, right? Because you're now stuck. So what's happening here? They bought there, they bought there, they can't get anything. So what are they going to do? They're probably going to wait until the 15, maybe 20 point hit, then they will buy. And say the 20 point is 72.75. Then this will become the break even. So they have to wait until market comes to the 19 to 20 point area. So the 19 is 73.75. 20 is right there. Then many bears will take profit, and then we're probably going to bounce again. And approximately somewhere here is going to be the break even. So you're back into the trading range. And if you're disappointed, well, you can always exit out. Or if you're trading small, which you should trade small, when ATR is more than 5 points, you should not be trading with multiple contracts. You should be trading small, okay? If you're going to trade with multiple contracts, trade micros, okay? So especially if it's more than 10, you should be lowering the risk contract size, okay? If it's less than 10, then you can use multiple contracts. Because anytime ATR is this big, the chance of the probability of these bars extending or closing 2 times the ATR is higher. So that's what you're getting right now. Bears didn't really test the 19 point. It came very close. This could still continue down. So it's trying to get down to here. And as they take profit, we might bounce back and these bulls will try to get a relief, but it's tough. Not many can hold this. You get a surprisingly big bar coming down. They will exit or they will reverse into the 15 point and 20 point area. So market could sell into this blue line right here, low of day, and make a little bit even more, move down, make a new low of day before reversing back up. But we have closed below this breakout test area. Bears want a 20 point out of this, so it could come down to 72.75, maybe even further below. It's a trading range. It's still a bear flag now, 1, 2, 3, wedge top. Bears are trying to swing this. Are you going to buy here or are you going to sell and make money? So that's something that you have to decide what to do there. Because bears, if they do close a bear bar, they will try to bring price down below the low of bar 7. And there's room to downside. This could go all the way down to 43.67 area. So what happened on the Globex chart? Notice what happened on the Globex chart. We have no close above it, but we did test that area, which I said that we would probably test it, and did. So now you have a 1, 2, 3 wedge top, or 1, 2, 3, and a bear flag continues. So bears now want this 20 point. So I was stuck up here. I was still long. Even though I scalped, I had a 1 contract. I always leave a 1 contract in case we get followed through. I exited and I sold, and I'm looking for a test of this blue line hot low of day. We already tested 19 points, so the bears should try to get to 20 points. That's 19.1 point above this line. So now we are Testing the 19 point again, 73.75. It's coming down. That's it. That's 20 point right there. Everybody is making money. And this could actually get follow through into 43.70. Furthermore, 67, 65 area even. Yeah, it is very difficult for sure. Next target is 68.25, maybe down below. Swing started at the key level. This is a key level I pay extra attention on Globex. Okay, especially if we're stuck inside the range of Globex. We now have a break below the Globex low, but look what's happening here. They're trying to take profit. These bears are trying to take profit, but if the profit taking is short-lived, this could continue to come down. Next target for bears is 67.75. I did very well with that big bar and a follow-through, but it was a weak follow-through. And I did say when the EMAs are parallel and 20 EMA is below the 1 hour EMA, market will try to sell a strong bull bar. That's a strong bull bar, but got to follow through. So this was nice. So I said, I'll hold it. Maybe we'll go to the 43.95. That didn't happen. I don't know what caused it. I don't know what the news is. But we did test 76 low, but we couldn't get a follow through. Suddenly we get a reversal back down. So that's fine. I'm not going to hold my runner that's losing. I will exit and I will sell. So I sold, took profit at the 20 point. Now I'm selling more into 67.50, or maybe even if we can get a 65 test, I don't know. I'm going to hold it until this comes down further. I'm still holding. Low of yesterday's magnet. There's gap here. Market might be trying to close this gap right here. So what happened? Well, I think the bulls gave up, or they're going to wait for market to come down further. They could buy maybe 5 points below, 10 points below, or somewhere around low of yesterday, look for a trap. And what they will look for now is a bull bar. So I'm not going to measure it until I see that bull bar. There's a chance that bulls can still try to get some kind of a relief, but those are the ones that are holding. But the retail traders, they see bar 12, they're out. They rather sell and make their money into the magnet low of yesterday. I won't be holding such a thing. The target for opening range, which is a mess. I hate it when it just goes up and traps and then comes down. But I'm going to measure anyway. So I'm measuring the first 30 minutes. That is the measured move target of opening range. 63-ish. But I'm looking to take profit around 67 maybe. So I want a little bit more follow through here. Or acceleration into the 63 if they can make it. So you can also measure this entire bar and look for a 1-to-1, which is right here. So it can still extend further down below opening range. So that's 1-to-1 target for bears. They're going for this gap bar measurement. Or even better, that would be the 3 gap bar follow through. But I'm just going to go conservative and I'm going to measure only bar 12. So I'm looking for a 67 tag and bounce. And Hopefully we don't bounce here. I'd like to get paid. Or as early as 67.25, but we should come down even 66.50 area. So I'm going to hold this a little bit more. This is a difficult one today, and I seem to get those a lot, but oh well, we'll figure it out, right? And when ATR is large like that and the bars are big, and suddenly, I mean, listen, we started with the news is Biden having a speech in Middle East. Market was obviously reacting. Look at the barbed wire. Look at the test. Yeah, that was very nice. Now, some bears, this is a way too big, deep pullback. No one bought the pullback. Normally, you get this 2 bars is from barbed wire. That's buy the pullback. But are you going to buy this? This isn't disagreement. This is confusion. There's something causing this. Are you going to buy? No. It's obviously bears are trying to get a 20-point, if not 30-point out of this. So if the bears are trying to get 30-point out of this, which by the way happens to be 62.75, you're not going to try to buy anything. You're just going to sell. You're going to find your measured moves and you're going to sell, right? So you get a spike. There's no pullback here. Maybe bar 13 high is a pullback and down and down. We might get another leg down. But low of yesterday's magnet, 67.25 is the first tag, could bounce there. There's a little bit more room to downside. I would hold. I like to see one tick underneath low of yesterday tested. So I don't like the fact that it's trying to bounce here, but I didn't take profit. I'm still holding. The pullback, probably sellers up here waiting. Bulls trying to get a good signal bar, but good luck with that. I think there's more room to downside. I'll believe it when I see the bar. There's nothing yet. It came one tick close to my target and left me behind. Actually, sorry. Yeah, 2 ticks close to my target. So I was at 67.25. It came down to 67.75. But I think they're going to sell up here with this pullback. Bears looking for another leg down, possibly. But look what we tested. My target, 68.25, so it's bouncing. You could have also taken profit there. I didn't. I'm looking for follow-through. But is this a good bull bar? Well, look at the way that it opened. It opened, came down, and closed higher. It's actually a decent bull bar, but it's got an upper wick. It's problematic. But some will buy that. So where could be the sellers? Look at the breakout bar, 12, and a follow-through 13. So somewhere around the upper 1/3 of 13, bar 13. Let me get rid of this. Sellers waiting. So now, how can this become bullish? Can we, instead of coming down with this pullback, can we go suddenly up? You need 3 dojis. Buy the closed dojis with decent closes, decent bodies. Then you could suddenly get a bull bar testing the 50% of this gap. But so far, they're buying. That's the second bar. But there are sellers up here, maybe at the high of 14, maybe upper third, bar 13. Sellers are still waiting there, and they're going to want to sell it. So you have kind of a spike pullback. We might get another leg or 2 down and test this area. So you can't really buy bar 15 unless you want to scalp quickly, because probably sellers waiting either up here or up here. Don't need this one. So the area I'm interested, somewhere here, sellers might be waiting. Somewhere here, sellers might be waiting. Or at the high of 14, they're looking for a double top. Target is still down below, but we need a bear close. It will continue to go higher, sellers above. In this area. We get a bear bar, then we have a double top under the EMA. Bear flag. Small bear flag. Bears want to take out the 15 low, and they want to follow selling, get a follow through into 43.63. Which is the 30-point area. But we need to close a bear bar here. If we close a bull bar, then we're going to go right back in here and try to make a double top with bar 13 high. I'm still holding. At this point, I'm looking for a 30-point swing here, which is 62.75. But low of yesterday, we could test one tick underneath low of yesterday. This is a spike pullback. We need to get another leg down, even if it's a small. So if we close a bear bar below low of yesterday, that's because we have a gap here, and the bear is trying to close this gap. So that's right there. So I'm still holding into the 30 point, and I'm getting ready to scalp the 30 point because we will bounce there. That the gap is closed. I mean, some are taking this, but there's still gap there. So 63 is your measured move. Oh, you jerks. Okay, sorry about that. My scalp was at 63.25 and it comes down and tests 63.50. You gotta be kidding. Why is this always doing this to me? All right, fine, I'll take the profit. Nah, I'm gonna hold it. You know what? I think it wants the 62.75, so I'm gonna hold it. Come get my target, damn it. I'm just gonna hold it. Keep doing that to me, but let's just wait. So 63.25, 2 ticks above 30 point, is because it seems to be always come to 2 ticks or 1 tick to my target and bounces. So fine, I see your game there, machines. I'm gonna try to scalp. You're gonna laugh at this, right? It's almost like you want to say, they know exactly where I am and they see me and they're trying to trap me. Nah, no such a thing. This is actually going to test 62.50, believe it or not. It's coming down to test the 62.75 and 62.50. So I'm going to outsmart these jerks, and I'm going to be scalping around 63.25. So I'm sitting tight and waiting. Come get it. Come on. I will not be tossed around and played with. 63.25. I am outsmarting you people, or machines. There are no people. But 62.75, it keeps coming down and it's just keep bouncing. It's like, talk about playing with someone's emotions. 63.25. It's still, it just bounced again. I'm going to hold. I'm just going to sit here and I'm going to look pretty. I don't care what they do. I'm going to get that money. Hopefully it won't bounce like 10 points. That would really upset me. There it is. Yeah. 62.75 is 62.50. We should test. There should be no problem. I just got paid. Yoo-hoo! It's coming down to 63. It's probably coming down to here, but this is where you should pay yourself because it will bounce. It might dip a little bit. It's a really nice bar. So it will probably going to get maybe another small leg. That's the gap close right there, 58.75. But I took my profit because I did say it's probably going to come down and test the 62.50. It was a lot more generous, and it tested 62.25. So I got what I got, and I'm happy about it. I can't complain. But it's got a room to downside. It's trying to come down to 59.50 probably. Maybe 60, 43.60. So it's got a little bit more room to downside, or 43.59. And 40-point bears, if it gets a good strong follow through, you can hold a runner into 53.75 to 52.75. But look where it's bouncing. That's a 30-point. I mean, if you don't believe me, all you have to do, check my handiwork, right? That's a 30-point. That's why I took profit, because I knew this was going to bounce. They could sell this bounce. It's going to the breakout point of bar 15 low. So there are probably sellers there because it's a breakout. But more this bar closes with almost no visible upper wick, there will be more buyers, and they will try to push this price even higher. But if it gets a long upper wick, it will become yet another bear flag, because people were selling underneath bar 17, so they already entered. They're just upset right now that this bar just bounced. But we were 2 steps ahead of machines, right? So even though I threw a tantrum there about not getting filled, but I was already 2 steps ahead of the machines, and I knew what they were trying to do. Step 1, measure move. Step 2, 30 points. So I know what they're trying to do. They're trying to shake you out with either no reward or small reward. And but we didn't fall for that. But we already also know that's the 3rd step ahead, which is profit taking and bouncing strong. So it's bouncing. If it closes a really strong bull bar, okay, that's basically it's trapping these sellers looking for a follow through here. What would happen then? Then we would go up to the 15 low or 16 low, somewhere upper 1/3 of bar 17 there will be sellers waiting. Probably sellers up here. So upset bears will try to sell here, quick thinking bears, and they're going to try to plunge this down maybe half the ATR size first, which is about 3 points, and 3 points. But bigger the higher upper wick, then there will be sellers at the close of that bar possibly also, or above. So there's room to downside. Still 40-point bears looking for a good, decent pullback to sell. There's room to downside 59, 50, 59, 75, or even 60, test of 43.60. I think they want, or even furthermore. And the reason why I'm calling 43.60 or 59.50 area, that's institutional support. So we need to get in there before bouncing again. Some try to sell the close of bar 18, but it's a very strong close, so I would not do that. Bears got about maybe bar or 2 to sell this and exit out if they're worried, because they're trapped, right? So it's still trying to get back up here. Some will sell this area, try to bring it down, and if they're worried, so you measure where they're maybe selling, upper 1/3, 50% is somewhere here. As it comes down, they could exit and the market can go higher. So there's wedge 1, 2, and 3. So bulls are trying to get above the bar 17 high, but if they do close, there's still sellers here. Look, 2 strong bear bars, sellers are here. It's going to try to come down because these bears are upset. They need a little bit of relief before we get the 3rd strong bull bar. That they will buy the pullback and go into this area. Seems to be the target still for bulls. But you got leg 1. We need another small leg. So if there's a wedge here and it's a wedge reversal, what do? I measure the last bear bar. Okay, so I look for a bulls to take out that high, but I don't buy right away because sellers are here. I look for a pullback to the 50%, give these bears a chance to exit, and then if I see a strong bull bar, I'll buy that. Bulls trying to get a 9 to 10 point out of this bounce. I warned you about this bounce, right? So I still think that the market wants to come down, but it's too low to sell. Now, another reason why this is bouncing, we talked about this. This is a gap, and this gap is strong. So you're basically selling into something very bullish. What do you think is going to happen? Well, it's going to bounce first. No one's going to want to sell into it. These bears taking profit there. I said there are several reasons why, but now this is getting way too strong. What could happen? Can we still come down to the 40 point? I'm no longer interested in this because bulls already moved the market 10 point and some more, 11 point in fact. So this is too much of a pullback that I'm not interested in that area. What I'm interested in is that bears selling. Now they positioned here, and they're looking for a break even because they're still stuck down here. So they waited for a 10 point, right? That is not 10, but this is 10. They waited for a 10 point. Maybe that's when they started to sell because they know these bulls are going to pay themselves. So they're looking for quick dip and get closer to here. If that won't work and we continue to go high, then this is where they're going to sell. But some selling that close, some selling at the 10 point. This is where they want market to come down. Bulls want a second leg up into this area, but first these bears are desperate. They want a relief. So either they sold the close of that bar and they sold a 10 point. That's their break even. You see how it's still trying to get there? We need to give them a relief. Now, if the body actually closes below that 50% pullback or the break even, we could end up coming down to the 17 close very quickly. That's a break even right there. Some bears will actually take it, but others, if they see a bar close, they will hold all the way down here and furthermore more into the close of gap. So you don't just buy. Know that when somebody's stuck here, they will sell the 10 point move up. Okay, so because they need a break even. Bears so disappointed because they were going to close this gap. Now they want their original contract to make money, so they're doing everything in their power to close that body one tick below that pink line. But if they fail, bulls will buy in. That's basically low 1 from new low, I'm counting, and buyers are probably here underneath or at the close, and we could end up going back up here also. So I wasn't stuck. I didn't care to fix this, but I'm watching alone, as I'm trying to be 2 steps ahead, meaning I'm looking for 2 reasons why not to do something, okay? That would keep me safe. And that's what I'm trying to do here. That's what that 2 steps ahead of machines terminology. Exactly. So as low as possible. Target is 17 close or 1 tick under. And if they get that close, they will try to get a follow through breakout. And that's where I said we might need another leg down. But that's kind of low 1 rally. But the problem here with this low 1 is that 2 bars too strong. Bulls also want a second leg up. So they will try to trap again some of the bears. But if we take out the 19 low with a bear body, then game over for bulls. So this will sell further into 58.75. So I'm watching what's happening here. Bears are trying to take profit. They just tested the 9 point. They want 10 point. Is 10 point for bears is 64.25. That's 9 point plus 1 tick test. I don't think it's good enough, but because it's very strong so far, and the bears probably want that. Not only they want the 10 point, they probably want a test of 17 close. And if we test the 17 close and bounce pretty hard, technically bulls can still get a second leg up. But once we get there, I think it'll be game over for bulls. If we can close this bar 1 tick below 19 low, that's it. So that's follow through. You can see there's a fight to make money with that original contract that they sold. And if we do close, okay, that's pretty close, but that's still a low 1. Some bulls will try to buy that close. But it's because that's a 10 point. So they know these bears will take profit. But I would be careful here, because bears still want a joy. So that's it. They're about to get their joy. Come on, just there. Tag it. If no joy, then we bounce. Institutions are trying to block this break. But you see, that's joy. They got it. So bears got this. So they're trying to go for 14 or 15 point. 14 point is 60.25. They can push this as early and start taking profit around 61.25. But most likely they will get to the 60.25. Some see low 1 and they're trying to buy underneath that bar, but it's strong close though. If this bar closes bullish, bulls will try. The institutions are trying to block, okay, to breach of 18, so they're buying. It's in the blue book. I think it's like page, I don't know. Let me take a look. Where's that book? I don't know if I can find it as I'm trying to trade here, but it's explained in the bar by bar price action why we suddenly get this. Now, we did test. That is no coincidence. The close of 17, bears still want close below that so that they can get a follow through into 58.75. If we don't get that, then we have a reason we could reverse back and these bulls can still push this higher. So this would be then second sell failure below the low of yesterday. But if we get 2 consecutive bear closes, game over for bulls. We will push this further down to 59.50 probably. And I did say we're probably going to come down a little bit more. Only if we close another bear bar here. If we fail, then that's it. we could then go right back up again. So we have wedge, double bottom, slightly higher low. Around 11:30, some kind of a reversal. We got a wedge here. So bulls are trying to get a reversal here. If this body does not close bearish, that's going to be the second attempt to sell and failure under the low of yesterday. And we could finally reverse back up. And when a gap stays open, bulls could get actually serious. But you only will know when this bar closes. So you can't really judge saying that this is reversing. You have to always wait for the bar close. I don't know if I want to buy this, to be honest with you. I'm not all that excited about it. I'm going to wait bar to close. Because there is a institutional area around 43.60. The market wants to test, it seems. So I wouldn't buy anything here just yet. Some see a reversal here, wedge, but wedge, and a failure here, low of yesterday, and they're buying. But there could be sellers up, wanting a break below the 20 low. Now, can we get a second entry long above 21? Yes, that's what the bulls are trying to get. So you can take a chance and buy, but then you'll be looking for a 9 or 10 point. So if you buy one tick above, that means you're going to measure from here to here. Probably not. Oh yeah, it's 10, so you're going to have to measure from here. You're going to have to measure, that's 875, that's 10. Because it's a tight trading range, we may not reach 10 at all. So from the low, second entry long is activated above 21. But this bar has to close bullish. $71.75 to $72.75 is possibly the target, but it's very difficult to buy, so I didn't buy anything here. We have a trend line break. Oops. Slightly, or that. And now they're trying to make a major trend reversal, so that's still target. If we get the second bull bar, then bull's probably going to get somewhat serious. So second entry long above 21 still active, and the bulls still want market to get to 71.75 at the minimum, or 72.75, or to the EMA. This area seems to be target still. There might be some sellers, but it's a double bottom. Okay, so now it worked. Okay, so the bulls are getting serious here. That's a neckline. Bulls trying to break if they break the neckline, we're going to get here. And then we're going to pull back into the 10-point mark. Okay, we're going to go up here, we're going to pull back, and then the buyers could show up, which I talked about. Failure, okay, breakout failure from low of yesterday. Second time, bulls are reversing, okay. So we had a breakout here, got a nice leg down. That's also a leg, but why didn't we get follow through? Bulls trying to keep this gap open no matter what. Let me get rid of that. They're trying to keep the gap open so they can get back up. Probably the 50%, like somewhere here, sellers might be up there. So if you bought above 21, what did I say about where you should be scalping? Did you scalp that 10 point? Because we just reached that. That was 72.50. Either 71.50 or 72.50. You have plenty of space to scalp. So Now, if we do close above 72.50 or we go above 22 with a bull bar, then bulls will gun this further up to that red zone, but they're taking profit right now. So you're in a tight trading range. It's nothing but a scalp, right? You're in a tight trading range. It's nothing but a scalp, right? They're still trying to get a second entry short at the EMA, but we didn't even test the EMA. So I think this has still room to upside. Bulls want to test the 43.75 and furthermore 76.75. If the swing begins and we do not get a sell here, okay, bulls will try to fill this and try to get back up here, but it's not all that easy. So maybe 1 to 2, 3 to 4. So it's possible that market wants to get back up here, but we're making lower highs and lower lows. So everything's a bear flag basically. So market is still taking profit at the 10 point. If other bears start to join, that means we close a strong bear bar, and that would be sell to close. But I think this is a pullback, and we're going to get a second leg up into this area. So I'm not going to sell this because I think this is where market is trying to go. Bears want to sell the pullback. So EMA, and that area seems like a good place. If we can close this bar weak, bearish. Bears want to keep the gap to EMA open for about 20 bars and then get back to EMA and sell it. So if we close a strong bear bar somewhere near bar 22 low, that'll be bad for the bulls. And they can break the 22 low and get an early low 2. Technically, this is low 2 with a gap, could be really bad for the bulls. So tight trading range, some machines are selling is at the high of this trading range and scalping about 2 points, I guess. I don't know. Let me see. So 71, yeah. But if they do close a bear bar, other bears will try to sell and target the 22 low. Okay. So some bears might be trailing a sell stop order, but I wouldn't. Underneath these bars, 21, 22, now 23. So the moment this bar closes, they will trail it right underneath, but I wouldn't. I think we have room to the EMA and we're going to get there. In fact, we don't have to stop there. Open of the day is we might actually test. So it's kind of a trending trading range. I'm going to see what the market is going to do up here, because take a look at these 2 moving averages. Although we're bearish, so bears are looking for a pullback to sell, we might actually close a bull bar. Everyone will buy it, but the bears will sell it probably. So, but if we accelerate and break this area, open of the day is target, and even this area is target. So I am not selling this. I ended up buying actually. I'm looking for 43.75 to 76.75 area tested. Scalp is 74, 43.74. there will be a quick scalp, but if you close above it, we go to 76.50, 76.75 area, and that's where I want to scalp. Whoo, that's great. Let's go. Okay, we just tested the 76.75. If the bulls get accelerated here, we could end up going to open of the day, which is the 50% pullback of this gap bar. We know there are sellers here, maybe even lower 1/3. So if you actually measure, wondering where the bears might be sitting and waiting, some bears are here. They want market to get there. Some here is maybe around here. There will be sellers. But if we break this red zone, that becomes a buy zone. If we break and close above it and test this area, even though there's sellers, we come back and retest, this becomes, think of it as green zone, becomes support, and we go higher. We could end up testing that high, even further high. So, okay, so we tested here. That was your average 14 point. You should have taken profit there. But if we start to close a strong bull bar, we could go higher. Bulls are trying to get a small pullback bull trend, could last hour, but first they need at least half hour. So, hey, maybe it already started. So you have 1, 2, 3, 4, 5, 6, 7 bars. It's already been 30 minutes. They might get another 6 bars going upwards, as long as this bar closes bullish. So the target is here, here. So, but we need a bull bar. This is profit taking at 76.75. Average 14 point. Okay, I didn't go for 15. I went for 14 just in case it fails, because it is a sell zone regardless. But can this sell and not go further up? Well, we need a bear bar. So that could end up being a bear flag, 1, 2, maybe 1, 2, 3 wedge. If we get that bear flag, then I'm going to forget about this for now. Okay, so then there will be sellers wanting to sell the pullback to EMA and get down to the 58.75 and close the gap finally. But look, listen, if this bar doesn't close, it looks like it's selling right now. You got an outside inside. So bulls did take profits. I said 43.74 is a scalp, but the next is 76.50 or 76.75, which we tested all. Now we close a bear bar is below 43.67. 43.67. We close a bear bar. They're going to target bar 22 low. And if the bears actually target bar 22 low, there are buyers waiting there, wanting to trap the bears. But they close a bear bar, one tick below 22 low. They will get serious about selling into 43.64.25. So what's going on here? Well, bar 24 is basically sell signal bar, so they're selling the close. They're looking for a test of 67. That's it. All right, so they're getting serious. You see how this worked out? So they're now looking to test the bar 22 low. We need a bear close here. This isn't enough for bears. We need a bear close. So the 25 needs to close bearish. If it doesn't, it's a micro bull flag, and I'm not going to sell. If the 25 does not close bearish, okay, I am not going to sell this, because basically this is a bull flag with wedge, micro wedge. It's still loading, okay. Or double bottom. So there's a double bottom, but we did close a bear bar. This is a 1-minute chart. We close a gap bar. Now we're testing. So according to 1-minute chart, this is actually a bear flag. Okay, so what did they close? I don't know yet. there's still 3 minutes and 30 seconds. But if this bar suddenly closes bullish, the patterns fail utterly on 1 minute chart. This is why I don't trade the 1 minute chart. So I will not, then I have to see this as a possible bull flag. So, and here's another reason why they may not sell. If this bar actually closes above 43.71 with a bull body, bulls will try to get back to the highs once again, especially the high of 22, and get a breakout this time. So it's uncertainty here. How do I know all of this? How do I see it? Because I see an outside-inside bar and I'm measuring. Okay, so what I'm doing here is I have a threshold that I am measuring to see where the bars are going to close. Is going to give me a signal. Okay, so because I've tested this for years. Okay, here we go. So I'm measuring bar 22, which is the outside, last outside bar. Okay, bulls got a trap, but they did reach their target. See, kind of did reach it. So now what is happening here is 24 did not close below the mid-range of 2022. We're not all that bearish. But look what happened. 67, 43, 67, I said. If we close a bear bar below that, then yes, we will test the 22. We might even break down and sell into these targets, including the gap close. But if we do close above 71, 43, 71, then the bulls are going to try to push higher and possibly break this area. So this is uncertainty and seems like a micro bull flag, 23, 24, 25 lows, and a spike the pull, 21 and 22. So we need a strong bull bar. Taking out the 22 high with a bull body, that could present a breakout for bulls. But we don't know. However, if this bar comes down and closes bearish, then expect more bearishness. Bear flag, wedge bear flag at the EMA. Second entry short under 24. Stop above. Then you look for a 1-to-1 target or 2-to-1. So if this bar closes bearish, then the bears got this. So this is where I would sell probably. But I'm waiting. I need the confirmation. I need the threshold line, 21% taken out with a bear body. Otherwise, I'm not interested. 3 dojis, all sell the close. That's actually good for the bears, but last one is not all that stellar. So you see what's happening. Probably sellers up here. Disappointed that they sold underneath 24, which is a doji. There are always buyers there. Now is you get a range bar, probably sellers up here. So those disappointed bears underneath 24 will try to sell here. But this is a higher potential of becoming a bull flag. So I can see bulls see that, and they are, well, there could be a pain trade here. If we can close a strong bull bar, we could then trap those sellers trying to sell and go higher, and they will be exiting. And we could suddenly get bull bars closing above EMA. So it's very difficult here. I need confirmation. This is where I stop. And for bulls, I look for a bull bar closing above the 79%. I get that confirmation, I'm interested in buying. But if I don't get it, then bears will keep selling this. They're already selling the pullback because they see 3 dojis with bear pressure. They see this as a pullback and they want to follow through selling into the 22 low. This is where you have to filter out is all things sideways, possibly sideways and up. So there are they tested the 79% here. I'll make it larger so you can see. But we need a close. You get that bull close, bulls will get, they will start signaling you, okay? But you really need to close, not to test. Some buy it early and then suddenly it never closes and then they sell and it just plunges down here. That's how you get trapped. Bulls want to get in here and they want to break this. Break above it and turn this into a support. That's what they want. A strong bull bar. Bulls trying to get, remember, this has a potential of becoming a small pullback bull trend. I zoomed in so the bars look big, but it has a potential of becoming small pullback bull trend. Could last another hour. Bulls want, because it's a trending trading range, they're trying to get back to the open of the day. We need a bull close here. We're already surpassing the 79%. So they want to go test the upper wick, 76.50, 76.75. But we need a bull close. And also we need a good buy signal bar at and above EMA. This doesn't count, right? So we have something setting up here, right? So originally they bought with a stop here. So now is we need to take out this high with a bull bar for the stops to get here, and parked underneath here. So those stops are here. Bulls still don't have a confirmation of breakout. Now look what happened with the bar 26. Did it close above 79%? No. Everybody who bought it got trapped. So they're going to try to buy at the low or underneath 26 to break even again. Right? So it's dangerous. Right? We don't have a close above it. But if we finally get it, oh, we're going here, here, possibly here. Now look for that. Okay, so is those who bought while this bar was progressing trapped, right? So nothing closed above that. And they're like, what the heck? What do we do now? Don't panic. As it comes down, buy again. And now they're looking for back to where they got trapped, break even. Because if this bar closes bearish, we're going to come down to the 21% and below. So you see how they're breaking even there, those machines? But if the bar closes bullish, finally above 79%, we're going to surge upwards. So it's very dangerous. You saw how they broke even. But if it closes bearish, then game over. We come down. You want to filter out these kind of trades. And that's why I developed this method with outside bar, inside bar. And I look always for traps above and below the outside bar before I do anything. So target for bulls is 76.75 once again. Bulls looking for a good bull signal bar closing with a decent body above the EMA. But probably we're going to come back to the EMA and buy again. So if we do close above the EMA, expect a pullback and then get above another pullback. We're going to get a really nice bull bar, something like that, and they are going to buy and we could go right back up again. Only if that happens, obviously. So we haven't even closed above EMA yet. Can the bears show up here? Yes, they can show up and they can test the lows, even breach it before market actually reverses back up for good. Otherwise, there's sellers at the EMA. So no close above EMA, no buy signal bar, double top. Where is the bull bar closing above 79? It's not there. Bears seem to be constantly trapping the bulls. So that means they want to come down. They want to test the low of 22 if they close a bear bar. We haven't tested trap zone of the outside bar yet. Starts at 1140, goes all the way to minus 1140. So there's no bear close, but if we do close a bear bar somewhere here, low of yesterday, we could still test, but we didn't close anything, so it's still going sideways. Some both the 26 low got a break even. Bear bar closes again. So we got a double bottom now, or maybe even a wedge or double bottom higher low. This is still a bull flag, by the way. Or we're just going to come down, make the wedge here. So I didn't buy anything because we didn't close, but now I'm selling. So I sold, and instead I sold now. Took a chance. I want to see a bear close. If we do not close, I'll exit out because this could become a bear trap. But if this bar closes bearish, I will add one more contract. I will scalp here, and I'm going to wait for this and possibly this to be tested. So I sold, I scalped, I took a chance very quickly. I got what I got. I'm holding one. If the bear body closes below here, I'm going to add another contract. And I'm going to scalp here, and I'm going to hold one here and another one here. But if we don't get it, I'll exit out and look to buy. So we could still come down. Basically, we're still in the trap, and we could even test here without testing here, and then reverse back up. So the bulls got a room here to trap. There's a, oh, nope, this is plunging. Okay, I'm making money now again. I want this test at 65 to 64.25 to be tested. I want the scalp 64.25. You can front run it 64.50. But the moment, if this bar fails to close below 21, I'll exit because now we have a wedge bull flag, micro. Bears see triple top, lower high, bear flag still. And they want to take out the bar 18 low. They want to close the gap. So this is the measured move of bar 22. I think we're going to test the measured move, which is 43.59-ish. But we need a bear body right here, right now. If we don't get it, and suddenly we get buy to close bulls, then I will reverse. But I'm selling right now. So I'm looking for 21 low test. First here, I'm going to scalp here. Come on. It's nothing. I mean, there's not much of a space there, so it should come down. So it should come down. There it is. Generally, I front run it one tick, so I'm one tick above. It tested the lower trap line, but it's trying to close a bear bar. It's trying to, this is a shallow target. It kind of gives me kind of a threshold, because if we close a bear bar below, this is where we get here. This is the actual target, then my measured new target. So it's better for bears if they can close this bar. One tick below 22 is sufficient enough to sell further down. But if they fail, and the reason why it's keep going up, bears know that this is still a trap zone, and they haven't even closed the bear body to break out to downside. So this is their chance now. 10 seconds left to close this as a bear body, one tick below 22. Then we'll test this. We might even find ourselves right down here, which, by the way, happens to be the 14 to 15 point swing for bears. So the target is 63.75 to actually 62.75 for bears. They closed the bear bar, so that's good for the bears, and they will. There is news. Christopher Waller will speak at noon. Oh, by the way, there's only 10 minutes, so I forgot to open the question box, so let me open that. I'll take a few questions before I leave. So I'm waiting for bears to get their reward. So I'm waiting for bears to get their reward. $63.75 to $62.75 possible target. You can use it for measured moves. I'm measuring a big bar here, not the follow through. So you can if that's what you want. Sure. Measure that. Then that will be your measured move target. Bears wanting to scalp further down. This is their minimal target. And the reason why I expected, because 28 did close bearish. So if it didn't and only closed at or above 22 low, then I would have said I'm not expecting market to come down here. So if everyone's selling and they're disappointed, they will try to sell up here once again. 2 bear bars, probably some limit sellers. And if they're disappointed with this bar, they will try to sell and try to break even before it reverses back up. So I use the mid-range as a place where I expect some bears to sell again. But I did warn you about this bull flag, leg 1, leg 2. Okay, you see how it stops right there and it starts to make that upper wick? That's because some machines are disappointed because they were expecting at least this right here. So they're like, can we sell here and get this down a little bit and exit out before this turns on us? So that's what they're trying to do. But technically, this is still gap. I'm sorry, this is still from here to here. This is still a trap. And I warned you, bulls waiting to trap, because you have 2 bars underneath 22. Buyers are always waiting, okay? But this bar close, 28 close, it's a legit sell breakout, bear breakout. But market will always disappoint you. If the pullback was not this deep, and if they were to sell, that's great. But sometimes you get this nonsense. So what are you going to do? This is why I use these techniques. If I get into this, which I did, it trapped me. So I sold again. I broke even. Now I'm waiting to make money with that contract. Okay? I broke even with this first contract. Now I'm making with my second sell. I am still expecting market to give me reward here, which is either this 64.25 or furthermore down. Question box is open on GoToWebinar. You can post your questions there. So we have 2 closes under the 21%. One of them is a bull close, but it's still a close. It's consecutive closes, but it's not all that good. So would have been better if this bar actually was a bear close. Now you can exit. If this bar now closes bullish, now you can exit and give up, because this is now a wedge bull flag. So you can either wait for this bar to close, especially if it closes above the midpoint. That means we may not come down here, but if it fails, you can hold and still expect. It's really difficult today. This is still a wedge bull flag, only if this bar closes above midpoint of bar 22. If it doesn't, the bears are still selling. They're still trying to prevent, because this is what they want at the minimum. And if we finally get a bear bar, then we come here. So you have to make a decision. If this bar closes bullish, I am out. I'm not going to linger here. If this bar closes above that midpoint, then it closes above 79%. That's a bull flag. They will try to take out the 22 high and get back in here. I exited out. So I am out, and I'm going to wait for the 79 to be tested, because they trapped. This is a trap zone from here to here. So you can also say, well, they did close. This is legit. I can sell. But where is the bear bar? So you sell again here, you break even. You can either exit out and look for a bull bar and buy that and make the money on the way up. Okay, so it's a bull flag still. Bulls seem to be trying to close above the EMA. Let's see if they can actually make it. I'm out. I left my short. If it sells, that's great, but I'm not interested. Because this has a potential of going right back up to 43, 78, 78, 50 area again. So this one already reached target, so there's another bar you can use now as outside inside. Bears trap the bulls trying to get a breakout. They now want to come down to here, here, and here, but they have to now close a bear bar below low of yesterday once again. So now you can use this range, bar 28 range. Bears want to break out, and they might get that breakout because it's bear bar. But Fed Wallace is about to, not Wallace, I don't know, Waller? Yeah, Christopher Waller is about to speak. So he could actually accelerate the market down or up. They're still looking for a 62.75 14-point average, 15.6175 target. Could go down to 43.60. All right. New outside bars, inside bar, trap above outside bar. Bears looking for a break, but look, we had a trap already with 29, went up, trapped. Okay, at the highest point of trap zone, even breached a little bit. Sellers were there. Now they're looking for a breakout, bring the market to 63.50 area. So the target for bears is still 62.75. It's really difficult here. I was thinking it below 33% for that leg is, so it's still a short. Oh, there's, sorry, that's extension of the question. You measured with 12. Can I measure with 12 to, yeah, you can do that. We were just talking about it. Somebody else actually asked about that. You're basically here, I'd be measuring this. You got 3 bar and there's a gap. So I would measure. This would be the measured move. And look, we still kept that gap open, so we could still come down there. But if you're trying to take the entire leg, yeah, this would be your measured move. So the bears are selling, as you can see. So that could be your measured move. And I was just saying that for the first question that came out. Is it difficult to trade into? Yeah, but if you know what you're doing, I would recommend you to take the course. That is where how to trade the trading ranges is explained. It didn't close bullish enough for me to reverse anything. Okay, and then we have another outside bar. So bulls got trapped there in a strong sell. They're probably sellers or the close at the 30. And I said, we're probably going to come down to here, possibly even here. There's a gap close here. They might even push this further down. Or we have now a much better wedge, small wedge flag. But this is really a bear flag. Okay, so maybe double top, lower high. They're trying to take out the 18 low, trying to get measured move of this trading range down. Okay. But there's still small wedge bull flag here. So can we take out the 18 low? What if we don't? But I think they will try. So I wouldn't buy anything. There's nothing, no buy signal. Bears are still trying to take out the 18 low. They actually did. Let me see. No, they actually did with one tick. They took out the 18 low. They're trying to tag this right here. We need a bear close though. We're back to the low of yesterday, so we know that bears are trying to close this gap. So can this be a trap here? They need to close a bear bar. If they fail, then it's a one tick trap, maybe truncated wedge, possibly, or wedge, lower low trend reversal, right? So what do you have here? You have a trend line broke, came down, took out one tick below. They're trying to reverse back up. So if this bar closes bullish, you have a trading range low. Buyers are buying. Getting back to the 50%. If the bulls take out the 50% of this trading range and close above 28 high with a bull body, that's a reversal. Now I'll be interested in buying. So I didn't sell any of this into the low, but I'm now interested in buying for a trend reversal because we now have a tight channel line break, reverse back. So this is now becoming a trap. Market probably wants the 24 high. So I am now long, everybody. So I want to test of 43.75. I'm scalping here one point. One contract. Now I'm looking for a follow through with the next contract. So I got in with two contracts. I got excited there for a minute. All right. Risky bar, but it's also a leg in a trading range. But I think the market is trying to get to the 24 high. Bulls got a nice measured move target right there, 200%. It's pulling back. They're taking profit. This is still resistance. Okay, so let's see. I'm still holding a contract. And they see this as a trap bar. So the bear's selling at the high. But we're back to the 50% of this trading range. There could be some buyers here. But if this bar closes like this, other bears will try to sell again. That's where I will exit. So I don't like, it came to where I entered, so I'm out. This is just too much. It's up and down and up and down. I will look to see if bulls get serious here and we go back up again, then I will buy. Otherwise, I'm just not interested. Now, what's happening here? Can we actually sell this? I want to get rid of this for a minute. Can the bear sell this? Can we still come down to here? Yes. We are technically bearish. We're below the open of the day. 5-minute EMA is below the 1-hour EMA. We now have a strong bar and we're getting a rejection, also a strong bear bar. If we close a bear body somewhere down here, the next bar could be sell the close. And bears can actually bring this down, close the gap, maybe even further down. I don't know. So I exited the long. I didn't like this much of a pullback. I thought maybe 2 points, 3 points, but ended up going more than, I think about 7 one time the ATR. No, yeah. So it is slightly more than 1 time the ATR. That's too much. It just takes away everything. Now, if the bulls close this, because you have a range here, okay, so I'm going to measure from here to there. See, we're at the 50%. So I'm measuring from the close of 31 to the open of 18. This is the true trading range. Anything above, those are false breakouts. So we're at the 50% of this. If we try to close this all the way up here weak, I'm going to be interested in buying again. This time I'm going to look for demolishing this zone, get back to the open of the day, possibly back up to here. So I didn't have to exit, but that was too much for me. I didn't care. Now I can always enter once again. This closes weakish bearish. So next question is, to learn the TR, trading range trading, you really need to take the course or read the books. There's a whole book dedicated to that, trading the trading ranges. You can also read that. It's not that difficult. You can always buy low, sell high. Okay, so or if you're long, take profit there. Okay, and you could reverse and scalp. Will you reverse if it closes bullish? This is a leg in a small trading range. Machines know that, so they sell. Plus, we're kind of bearish. They always look for some kind of a bull bar to sell. But if this closes bullish, I'm going to look to reverse. All the way up to the open of the day, open of the week, maybe even further up to the 1-hour EMA. But you were asking about bar 30. Well, bar 30 didn't close bullish. I could have, but it didn't. So I'm looking for now bulls to start buying. Okay, so we now have inside, outside, inside within a trading range. It's also, here we go. So inside, outside, 30, 31, 32, breakout mode. Looking to see where the trappers are. Bar 32 did not test its lower trap zone, but bulls started to show up at the upper trap zone. So they're trying to send the price back to the midpoint of 31. And if they do close below it, we come down and test the lower trap zone. Buyers probably waiting down here or as early as at the midpoint. There are 2 more questions. I'll answer them. I'm just watching this right now. Since there's nobody scheduled after me, I'm going to trade a little bit more and stay longer. I'm looking for a slingshot here. Bar 31 is a strong bull bar. We are pulling back right now. If we get a strong bull bar taking out these bear bar highs and closing on its side, I will buy that. So that'll be my slingshot. So what the bulls are doing, they're trailing a buy stop order above these. Okay, it's kind of difficult because you're trying to go against the grain. Market is bearish, so we don't know if the bulls are going to succeed here. Bears are trying to undo this and keep this as a 1, 2, 3 wedge top at the EMA, or low 1, low 2. They're trying to get maybe low 1, low 2, low 3, or here was a low 1, low 2. We made a new low, so see, I don't want to count for low 1, low 2s anymore. This is where I'm wondering if this is going to be a pullback and we could get another leg up. This is where I'm looking for a slingshot for bulls, taking us back to the 43.78, because look how many times the bear tried to sell and failed. So we need a bull bar. Obviously, I'm not going to buy anything. I have to see a bull bar. Bulls are trying to trap the bears. Look, we made a high, came back down, maybe trap the bears trying to sell again. Okay, so we go back up, pull back. So if we can squeeze out the bears, that'll come in the shape of a bull bar. Otherwise, I'm not going to touch it because bears can still sell this. How would they sell? I'm looking for bear bars to close, okay, below the midpoint of this huge outside bar, 31, and take out and come down to this 21%. They start to close, there are buyers waiting here, but there's a scalp here. Okay, see, they're accelerating. Market wants to test the trap zone here, which starts right there below the green line. So I can't really buy this just yet. But anybody who sold up here in the trap zone making money, they're going to scalp to 21%, maybe hold all the way to the trap zone here. This is the entire trap zone, a little bit underneath the outside bar, a little bit inside. So this could still close a strong bull bar, reject, but you are in a trending bear trend. I just don't like what's going on here. Anybody who bought at the low of a trading range, seeing leg 1, leg 2, leg 3, they want a bullish breakout. Bears, leg 1, leg 2, or leg 1, leg 2, leg 3, they see a possible bear breakdown because market is bearish. So you have to decide, do you want to sell or do you want to buy? If you measure this trading range, look where we are. We are below the 50%, right? So I think bears might actually finally succeed here and get a bear flag reversal. Bear flag breakout. So I'm going to measure that. So this is where they're trying to come in to this area. So this measured move is still target. If they break this 100% line, what if they fail? What if they fail and we suddenly get a bull bar, get back above the 50%? Then the squeeze will begin, and then we can squeeze out the bears, but it's not yet there. Right now it's trying to break out, tested 31 low and trying to break out, get to these targets. It could, but I don't know. So this is a target. This is a target. This is a target. So these are all bear targets. So these are all bear targets. we need a bear body closing right there below the 21%. Then they will get serious. If I were you, I would watch the course first, Annabelle, and then read the books. It'll make it a lot more, seamless. Books could be a little bit harder, or you can watch a chapter in the books. In the course, video course, and then once you finish that chapter, find the corresponding chapter in the books and go through those chapters, read them. Okay, so I think that would make your learning even a lot more stronger and faster. That's how I did it, and I still do it. I still go back and read in tandem. Okay, so I'm looking for a breakout and test of this target, and gap close. Bears seem to be wanting to gap close. So this is a really nice, maybe second entry short from the EMA. So they're coming down, trying to come down to here. But they need to close 18 bar low. If we get that bear bar, we will find ourselves right here. And I'm probably going to take out this, but this is more of 127% what I'm interested. Only if we get, take out the bar 18 low. What happens if we fail? Look what's happening. Why do you think that this bar is going up? It's because it's hitting the trap zone. So the bulls are disappointed. They're trying to prevent the breakouts, but it could be, I think it's too late. Scalp for bears is 60, 43, 60. I've been calling that for some time now. Or 59, 50. Either or. So I think the bears should get this. We might continue to come down. But there will be scalping and possibly bouncing starting at 61 to 60 area. So no more ceiling shot for bulls. They lost their chance to do so with the bar 32 close and then sell the close. Bar 33 close and a sell the close 34. So there is room to downside to 43.60, average 14 point or 15.59. I'm short now. I'm looking for follow through here, but it's tough. So they're trying to prevent the breakout. We still don't have bar 18 breakout with a bear body, but I think it would be best if we can actually reach this target right there. So it's a bear flag. You could say double top EMA or triple top wedge bear flag. Either or, it's a bear flag. So that's the target. So I'm still short. I want this target right here at the minimum. This is what I want. We close the gap. Better if we actually close a bear bar underneath. If we do that, we will get a follow through into the next target right there. We close the gap, but better to get to these targets, I need a bear close, 58.75. That I want this target right here. That I will expect some kind of a stronger bounce. Right now I'm expecting follow through. We're bouncing. We're also taking profit at the 15-point swing. 20-point swing, bears profit taking can start as early as 54.75 to and then 53.75. So it's right around here. 19 points is right around where I measured with Fibonacci extensions. I use the Fibonacci extensions to find this target, but I need this bar to close bearish and get a follow through, accelerate down, get us to the 43.55 at the minimum. Excuse me, or 54.75. So this is one of these days. Let me show you what I mean. It's actually not an easy day because pullbacks are very deep. So if you go to encyclopedia, go to part 1, is A to B, and search for bear trend. It's one of these days that we actually do deep pullbacks and sell. So it's trending. Okay, so think of this as a trading range. Box 1, box 2 could bounce and give us the box 3 before actually rotating back up. So we might need to come all the way down here before we actually rotate back up. This is a difficult because the pullbacks are so deep and it's throwing people off. So trade them as a trading range with bearish breakouts, okay, after several legs, opposite direction within the trading range. Look for a breakout. Look for the third box, then look for a rotation back up. So that's what we are doing. Maybe like this. Okay, so we close the bear bar. Not where I wanted to. Yes, that's where I want, but I want it to close a little bit better. I don't like that lower wick, obviously, but bears can sell the pullback again. I'm looking for this target, so I'm not going to let go of this short. I'm going to hold it. There's a little bit more room to downside. Somewhere around 43.55, 55.50 is area we might actually test before bouncing with a good buy signal bar. I don't have that signal bar, so I'm not interested in exiting my short. I know I have so many things happening here. It's kind of, it doesn't look all that good, but let me clean this up a little bit. You kind of got the idea what is happening here. So I can erase all of this. So let's take a look what's happening here. Is we gap down, we went to EMA, we have a double top, and then sell. So we're making new lows. Test of EMA, we're selling. We might need to make another leg. Look at this leg. Okay, so, and we have a breakout. This pullback could sell again. So I'm looking for at least this target. Even if we don't get any of these, I want this to be tested so we get the second leg. And then I look for a reversal deeper. Or we're going to keep selling. Okay, so more, because this is now creating a small pullback bear trend. Okay, sell, 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 sell. And we might need to make a leg 1, pullback leg 2, pullback leg 3 before we reverse. So I'm still holding this short. I want bears to get a 20 point out of this. I sure don't like this pullback. And I don't want to see bulls closing in. Feds are talking. This is probably another leg down because we made a lower low here. And you have a tight trading range. First break of that trend line, okay, bear trend line, probably bears waiting. They're going to want to sell again. But if you're worried that this is going to be a trap and going to go higher, then exit. But I wouldn't, because this is going to probably come down here. So you should hold. So slightly above EMA and then keep selling the pullbacks and making new lows. And then it finally starts to rotate but closes below the EMA at the end of the day. So what's happening here that we may not sell all that much? Look at what just happened here. Big bull bar and a big bear bar. The dominant part of today's trading price action is really what's happening right here. So market may actually, even if it sells, it may want to come back and close at the open of the day today or somewhere near, because there were bulls here stuck, and we have confusion And this trading range is going to play a major role. Even if we come down, we're probably going to try to get back. So this today might actually close as a doji today. I don't know. Right now we're trying to come down, and I'll tell you exactly where it's trying to go. Remember, we had a outside bar followed by inside bar and a bull trap. Okay. So I'm basically measuring this day right here. Bull trap within the trap zone is of October 10th. Bears prevented, even though we went there, we closed. But look where we open. So market reached this target. It's trying to go beyond it and come in here. It wants to test this low right here. Can we accelerate and sell in here? I don't think so. I think we're just gonna either reverse from here and go right back up to here. If we go back up there, then today could close like this, okay, with a bear body. So we reach this target. They're trying to breach and keep selling down here and then reverse back up. I'm not sure if that's going to happen, but we could still try to do it. Even if we come down a little bit, we could still go back and close today as some kind of a doji. So open of the day is kind of important, but not right now. I still have bear targets. I still want bears to come down and reach these areas. So 36 the doji, probably sellers above. I like to see follow through to downside. Can the bulls show up soon? Well, can we get a couple of hours of sideways and up? Is small pullback bull trend come back, buy again? Well, we have this rejection, wedge pullback. I'm sorry, wedge bear flag comes back down, which is what we're doing right now. If we cannot close a bear bar, okay, around here, then we're never going to come down here, but I doubt it. I think we're going to come down here. I'm going to look for, because this is very strong, and this is the first test above, okay, break above the channel line, I'm sorry, the trend line, bear channel trend line. Bears want to test the 37 low, and they want continuation into here. And this is actually confluence from this mother bar's second target versus the Fibonacci extension. So it seems like a good place for bears to come down and test. Then I would look for some kind of a rotation, possibly. So I'm looking for, you see how they got their second leg and low and then trapped and reversed? We need that second leg as well. So I'm going to look for somewhere around here, traps, and then maybe a small pullback bull trend reversal with bar 40. So I'm still short. I want market to come down. Up to the EMA is trap and sells. It's gapping down with 3 legs before reversing. Leg 1 pullback, leg 2 pullback. That is the leg 3. Or leg 1 pullback, leg 2 pullback. Now it's making the leg 3. 36 is the pullback, and we might need that leg 3 before we start to go sideways and up. So we haven't taken out the 37 low, therefore this leg is not yet, I mean, it started, they're selling underneath, okay, so I added another contract there. So I want this right here tested, because that's a good confluence, so I want to see a test of that right here. So let's go bears. I don't want to see bulls right now. New is, okay, so I've got a new bar here. Where's that? That is 35. I did say taking out the 37 low. I really meant 35 low. Sometimes I mix those because I'm looking at this bar. So bears really need to take out the 35 low. What if they fail? But look what happened there. They actually did take out the 35 low, but it's kind of failing. It's failing. If this bar closes bullish, that to me is a trap, but it's kind of the leg. So maybe that small leg, I don't know. Or this is the leg. Leg one, pull back, leg two, pull back. I think this needs to extend down. So I'm not going to exit unless I start to see several bull bars stacking up. Then I'll exit. Right now, I don't want to exit, but they are trapping the bears. I like to see follow through, get a better wedge here, and then reverse back up to here. So I'm still in it. I'm still waiting for this pullback to sell and give the bears the 20-point swing. 19 point is at, I don't know where that is. I think around 55. Yep. And 20 point is 54. So I'm still holding. This is still the target. Could follow through here. And all of these are targets, by the way. They're trying to trap like this and go, but I think it's not okay. I would still sell. There's nothing to buy there. This is a bear flag. So I want this, this. These are all targets. We got that, but I'll just get rid of it. There it is. That's the target. That's a scalp. It should not only take that scalp, and it should extend. There's a little bit more room to downside here. 55, 55, 25, 55, 54, 75. I think the 55 is where we're going to test. So 43.55 is where we're going to test. Now, for bears, the opening range, obviously we had a lot of range trading there. Okay. 2-to-1 opening range target is 50.75. So we can also extend in there, which is around the measured move of this. That is the new leg. Needs follow through. We're so close to the, I mean, not all that close, but we are. It's about 8 points or so to the opening range. Second breakout target, range breakout target. But this is what the bulls want. They want to trap. But in this case, take a look at these hourly bar and the 15-minute bar. There's still room. It in fact come down to the 43.50 before we bounce. So there's still room to downside. But if you're worried about that this leg is failing, then you can exit because we have been selling and you can exit. But I think there might be some sellers here. 43, 59, 58 area. But there is a wedge here, 1, 2, and 3. So if this bar closes bullish, then you can say, I don't like this because this was the trap and they trapped us and we're not going to come down here. So we got a target there. We have a failing 1, 2, 3. 1, 2, and 3. Okay, so we have possible reversal. But look what happened with the 38. If 38 is bearish and everyone was selling and now stuck, what do you think they're going to do? They're looking for a place to sell. Okay, so they can get a break even before this actually reverses. So if you take a look at here, where can they sell? There's a trading range here. Sellers here, probably sellers there. And they're going to try to put sell orders here, trading range highs, and then they're going to try to get a quick reversal, plunge down, and they will try to exit out. Feds are talking, anything's possible. I exited. I didn't like the way that this was going up. I'm now done. And I mean, I could have sold here because I know there are sellers waiting. They're going to want to sell, especially two bear bars closing on their lows. Sellers are up here. So 37, 38, maybe even high of 35. But too big of a bar, but it's a leg in a trading range. If the bulls observe all of those sell orders, then that's something else. I have to sell even higher, but I don't want to deal with that, so I exit it. But look, they're selling. So some sold here, some I would have sold there, maybe 36 high. So this is the trading range high. They're selling, so they want a little bit more down, 50%, and that will give them a break even right around there. So if you don't measure it, if you're stuck here, you sold at the high of a trading range. I'm going to take the 37 high, and this would be my minimum break even. So I would want that pink line to be tested because that's where I would enter. That's what I would have a sell order. And I would expect market to get closer to that pink line. They sold higher, is at the high of 36. So if you take that, then that is the break even. But that area is all laced with sell orders. So the person who was asking about the trading range, trading, is it hard? Well, that's it. You're seeing right now where the limit sellers are. Disappointed bears, they sold. They've gotten closer, but no joy. So there's no break even here. What would they do next? You got a bar, it's a trading range bar with a really large upper wick. But the bar closed, okay, almost 70%, okay, is 70% of the bar's range is actually a bull body. It's still bullish, some bulls are trying to buy. But the problem here is that this is a leg in a trading range. 1, 2, 3, 4, 5 is 5 bar trading range. So the bears definitely want that pink line tested if they sold at the high of 36. That is the closest high. Okay, they got it. Others who sold at and above the high of 37, that's their break even, and they want that to be tasted, and they got it. So you see how this worked out? This is how you trade the trading range. Anybody who got stuck here, they sold higher, they got a 50% pullback. So what can go wrong here now? Well, this bar can close bullish, and then we could suddenly go higher. And that could start, where is that? That could start this right here. Look, they did the same thing. Stuck, sold right around those highs, got a break even. Now, in order to go higher, we need a bar like this. We need a bar like that, inverse head and shoulders with higher lows. Stop can go in between the lower low and that higher low, and you look for a 1-to-1, 2-to-1 target. To the high of this climactic bar, either the open or the high, so upper 1/3, and then look for a wedge top, 1 pullback, 2 pullback, 3, or 1 pullback, 2 pullback, 3, and then you look for a pullback with 3 pushes. It's 1 pullback, 2 pullback, 3. Okay, so technically this is the pullback, even though it went higher, but this is the first leg, pullback. Second leg, pullback with that doji, and third leg, That gives you a wedge bull flag, sideways and up, but not able to make a new high. So the bull flag fails, goes sideways, and gives you more than 20 plus, maybe, I don't know, 40 plus bar trading range. Okay, so basically you look for failure 1, 2, and 3. 1, 2, and 3 wedge, test of that, and test of that before reversing back up. Only if you get a bull bar. So what do we have now? Bears trying to get back to the as close as possible to the 38 close where they got stuck. Okay, because they did sell and then this went up, but I don't know if they're going to be able to make it there. They may not. Next bar could be a bull bar. So this is basically rally, pull back, first sell. Probably buyers underneath that bar wanting to bring it up, and then you would look for a second sell. But to me, that was a great break even, and it could be just a break even, not a continuation sell, unless we take out the 39 low. If we take out the 39 low, then the bears will try to bring market down to the original target, which is right there, and possibly can even come down here. So what do you do there? Well, if the bears break the break even, which was that, so I'm going to measure from here, which was that red line. If they break that and close a bear bar, expect follow through selling. Taking out the 38 close, which we tested, that is no coincidence. We had an example here with bar 17 and 21 testing and then reversing back up. Okay, so that's what they did. Now, if they do close the bar, very bearish, not like 21, but bearish, they will then try to take out the 38 low and try to come down to here, here, and here at the minimum. Okay, 40 is pretty bearish. Therefore, you have a bear flag here, and the bears are finally trying to get to the target. This is where you hold your short because you got a confirmation there. That's it. That's the first target. Now they're trying to come down here, problem. So that's still the third leg, still coming down. Leg 1, pull back, leg 2, pull back, leg 3 here. So I think I answered those questions. Can you explain a slingshot? I explained how it failed. This is kind of a slingshot now. As the bears take out this bull bars low, we are in a slingshot. Therefore, this is your target. The next question was, regarding a trending market, how do you distinguish a good second entry long from the second push up in a wedge retracement? Okay, I'm confused here, but I'm going to read this again. Second push up in a wedge retracement, which would trap you. That's a question. I'm going to read this again. I must be tired. I'm sorry, Rob. I'm going to answer this question. I promise. I just have to find an example. I can structure it in my head what you're asking, but I could be off a little. So I'm 60% off, 40% there. I've got a question regarding a trending market. Trending market. Okay, let's talk about the bullish market. That's what you're asking. How do you distinguish a good second entry long from a second push up in a wedge retracement? Well, you're obviously not looking for a climactic, but there's a good example right here. Okay, so what you're asking, and this is what I was structuring. So you're in a trending, bull trending market, right? So here's your pullback. That's your high one, right? So, but we made a new high. So I'm going to recount. So I put a little 0 there. I'm going to look for 1 and 2. That's 1, okay? And I'm not going to buy above this, so this is not good. But I can either buy the close of 18 because it went above and closed a strong bar, or I can put a buy order right there and wait for it to get filled. Bar goes. So here's what I'm going to do. I'm going to do this in a much more sophisticated way. Hold on, guys. Market is selling. Target is 20 points. We're about to test the 43.55. But here, I want to get back to this. So I hope that Rob is still here. Rob Burris, are you still here? I'm answering the question. Okay, so if you are, let's talk about this. You see markets going up. They built the first pullback, right? So that's a high one. Then we have a new high. Okay, that's great. I'm going to put a buy order right there. Okay. One tick above. I'm going to wait. I want to buy, but I need to see a high one. I can. Would you put a buy order one tick above that bar? No. It's a very strong close, and it's an inside bar, and the market has been pushing. But this is a spike pullback channel up. Most likely it needs to channel up further. But I'm not going to buy. I'm going to put this above, and I'm going to leave it above. I don't want to buy the first pullback. Chances are there will be sellers waiting to sell. Okay, they're selling, right? So, but it goes up. If you were to put your trailed buy stop, it would trigger you, right? It opened here. Let's see, it came down here. It opened here, came down here, went up, and then it closed. Or it opened here, went up, triggered you, came all the way down, scared the heck out of you. If you put your stop right here, you're scared. But your stop should be down here anyway. And then goes up and closes, right? So it closes bullish. So, but it didn't go anywhere. This is not a good buy signal bar, is it? It's the first entry long, faded. So, because bears need a second leg down. So it's better to keep the buy order there and look for second entry with a stronger bull close. So why don't you now lower it above that bull bar? I like to lower it above bull bars, one tick above. Here's the second. I'm safe there. This is a doji, so it's a trending, it's a range bar. Most likely sellers will sell the close, and the buyers are probably underneath bar 16. So it's a range bar. Buyers underneath, sellers above, or sellers at the open, right? Bear bar. I'm not going to lower my buy order one tick above. It's an extremely strong bear bar. But where is the follow through? Now I have bar 18. It's actually, look, it actually bought one tick above the close of the prior bar. That is signaling me that this is now a signal bar. So I'm going to put it one tick above. I'm going to wait for it to close. It closes, okay, so I'm one tick above 18, waiting to get filled. Now I want to enter because that's a second entry long. But I didn't enter because these bars are overlapping. But this is okay signal bar, except it didn't really close super well. It didn't really close on its high. But it's still good because of the open. Open is higher than the prior bar's close. So the bears are getting rejected. So what do you think is going to happen? I'm going to wait. I'm not going to force this trade. I'm not going to buy to close. This is still a trading range. I'm buying with the stop orders as L would recommend. So now I'm looking for more bullishness. Look, now this is a beautiful bar right from the EMA, above the EMA. I have two consecutive bull bars above the EMA. I'm going to lower it one tick above, and I'm going to wait to get filled. Okay, 20 fills me, comes down, scares the heck out of me, okay, and then closes like that. Okay, so I'm scared. Where's my stop? My stop should be down here. not here. This is a skunk stop because we didn't take out that high. They could come down here, fill you, and then go back up, you're dead. But if you put it here, okay, so now you're looking for probably a measured move. I'm looking for that test at the minimum, right? But I enter here. I entered, I'm in, and now there's another bar. Ooh, I'm going to buy that. I add above that. I get filled with this bar, okay? I put one tick above, buy order or buy to close. I get filled with 22. I'm making money with my original entry, 95, 75 above here. I added more. Ooh, this is beautiful. I could buy this. Forget about that. I could buy this again, but this is the first breakout, so it needs a pullback, right? But what I'm going to do, I'm going to scalp a little bit here. I'm going to pay myself. As this comes down, I'm lowering the risk. But now my stop moved from here to here, okay? I could even put my stop underneath here, but not here. Once this high is taken out with this bar, not only I'm going to buy that, or you can buy the pullback, but I'd rather to wait for a breakout. I'm already in a long. I'm going to put my stop right there, okay? Another bar. This is much better. I'm already long. I'm going to buy this bar instead, okay? Get filled with that. I'm going to trail my stop. Is break out of this high. I can put it right there. I can put it right there. Break out of that. Now we're getting certain highs. We've been up high. I don't want to exit. I don't want to be killed. I don't want my stop to be taken out. But I want to keep it somewhat tight. As I'm scalping with multiple contracts, I'm holding more, right? So what am I doing? Another pullback. No follow through selling. You can sell. You can buy either one tick above that. This I would not buy above it, because this is right here obviously taking profit because it is a magnet, okay? Bears know that bulls will take profit there, but there's nobody selling, because if there was a bear bar here, okay, then I would have tightened that stop right here. If the 33 was a bear bar, I would have tightened it right there, because if it tries to reverse, I can exit, either sell into the EMA and make money, or buy at the EMA and buy into the bounce. But my stop could be here. I would leave it there. So there's no bear bar. Good close. You can buy that again. Sorry. You can buy that again. But now we're going sideways. Bar bodies are getting smaller. Even though it's buy to close is sideways. Another pullback, another bar. You can buy above it, okay? But you also need to count how many times we made spike, pullback, up, pullback, up. 1, 2, 3 wedge top. You see this. You're trailing your stop. Your stop's here. Did we take out that high? Yes. Your stop is now here. Okay? As this comes down, either you're going to let that stop hit, or you're going to exit out. You see this bar right here. So you see this bar. You should actually sell this underneath, and your stop would go away, and you entered. You took profit basically under this bar, and then now you're short, looking for a couple of legs down to the EMA. So hopefully that explains, Rob. I'm sorry if I veered off and explained something completely different, but hopefully that is the second entry right there. I'm utilizing the bull bars, not the bear bars, okay? So I'm going to go back to the I don't know, did I miss other questions? I'm gonna stop the questionnaire session. I think I answered everybody's questions. I want to get back to where we were and see. Oh, look, that target met. Gee. Even that target met. We didn't get these, but hello, this is beautiful. So now, done. Some of the targets met. Now, those of you were so keen on measuring this and looking for a measured move. Now what? Sorry. What happened? Aren't you upset with this? But what if you measured this? And this would have been your measured move and you've taken profit before 39 pulled back. Or you only measured this gapping. 12 and 13 close. This is generally what I like to do for follow through. Now you tell me, and this way you don't have to measure that. This is how you measure. That would have been your extended measured move target. That would have been the accurate way of doing it. But I'm conservative. I'm always going to measure this, okay, first. But I'm not going to put my stop there. Obviously, stop is going to be right there. So this would give you a lot better. Before it actually reverses, you collect, okay? So getting the entire thing may not be right. If you're going to get a leg, at least is, look, get the 2 bars and not the wick, and that should be your measured move. It goes beyond and then reverses. This is the right way to measure it. The reason why I choose it this way is, and not this way, okay, it's because that's too much. Look how much we went sideways. Market is telling you this isn't all that wonderful, and bars are not all that good. Yes, this one leads a leg 1, leg 2, which I said we will, and that's why I measured this is entire leg and then closed, and I looked for conservative targets such as this. That was the target. Did we get it? Yes. I had additional targets, but look, nothing closing below that. So now is market could bring us back up to the open of the day, believe it or not. So is, okay, I would look for 2 bull bars at the EMA. I think this is that deep pullback that I talked about. Here's 1, here's 2, here's 3. There's a wedge here. Wait for a pullback to EMA, maybe another bull bar. I think the market is trying to get back to the open of the day. I don't know. We could still sell, but this is a 1 big bar. It's also very risky. If you want to enter with this bar, you should buy the pullback. First pullback. It could actually come down all the way to 66%, which is a 33% pullback. Big range, but it's too risky. Sometimes buying the close or 1 tick above is not a good idea. Okay? Ton of people are trapped here, but the machines didn't. Why? Because machines know how to get extensions, and that's how they got it. So I would probably wait for a discount entry. So what you got here is actually 2 bars reversal on a higher time frame. Let's go to 30-minute and see. Yeah, look, is 2 bars gapping up. It could actually come down a little bit. There are a ton of people are trapped here, so they're looking for a good place to sell. Maybe up high here is up high here, upper 1/3. They're going to look for some sort of a pullback, but because the bar is too big, we're probably going to reverse. Or on the 1 hour, let's see, maybe that. Yeah. Let me get rid of this. This is the hourly chart. That's right there is gap. We didn't really close the gap, if you ask me. To me, this is still open. It's a wick. Would have been better if we actually had a overlapping bar with this bar. But it still is, you know, gap kind of closed. So it's going back up. Probably some sellers here waiting. As it goes up, they will sell and they will try to break even because they are stuck underneath. So what do you think is going to happen on the hourly? If you're bear and you were still selling and you didn't know anything about the fib extensions and didn't have that 127% target like I use all the time, what do you think is going to happen? As this bar goes up, you got 1, 2, 3 bear bars, trap bears. They will sell at those highs, right? And they will try to get a break even. So next hour could actually go sideways because it's a trend. Bear trend goes sideways into trading range eventually. So what do you get on the 5-minute? We might end up getting some kind of a trading range. So here's what could happen. We now have always and long setting up. This is becoming bullish, but we do have a trading range highs. So the market is trying to go there. If we go there, there will be sellers bringing us back to the EMA. There will be probably buyers will bounce. But look, they're already trying to sell. So I would expect a pullback to EMA. But we are already always in long. Anybody who's selling is desperate to get some kind of a break even. I would not sell against these bars. In fact, I would actually look to see if I can buy the EMA. But if you are a bear stuck underneath 42, where are you going to sell? I'm looking for a good gap bar. That's the close. I'm sorry, that's the open, 31. Where's your break even? Slightly at and below the EMA. Can the bears bring market there? I don't know. If you're selling against this, I mean, that's just tough. You're trying to sell against these 2 bull bars. I wouldn't do it. And if it doesn't sell, what do you think the bears are going to do? They're going to sell a couple of points above bar 32. Maybe they're going to sell the 32 close. I'm sorry, open. Or a couple of points above, right around maybe here. Then this is going to be their break even. But by then, they're going to be entering with multiple contracts. They might have already entered here, and then they enter here, right? So I'm going to measure that again, and I'm going to find it. So if you're a bear, you already entered, which we saw that they did. So, but they're disappointed. I'm going to measure also there, just about. So let's say they entered there. So this time, no wait, so you enter here, enter there. That's your measured move. That's your measured move. So, wait, I'm having a hard time measuring that. Here, what I would measure. The 2. So, by the time they enter again here, somewhere between that measured move and that measured move, they're going to try to pull the market, and that's where they're going to exit before market goes back up to the open of the day, maybe even to these highs. So good luck with that. I would never sell against these 2 bars. There's a trading range high. There's also wedge. Okay, it's going to come back eventually, but it's right now trying to get back up to possibly here or maybe even the 50%. So I see a bar like this. This is a complete disagreement. Okay, look, they both the pullback to the EMA. It doesn't look like it's touching, but eventually, as these bars goes up, you're going to see that the 44 testing the EMA because this lags all the time. But that's a pullback to buy, so they want higher prices. I would never sell against it. This is a disagreement. If I'm stuck down here and I didn't know how to measure for that bear target, bear flag, that's a fib extension for bear flag target, or the measured move, which I showed you how they actually took profit and immediately reversed, I would exit out with this and I would buy against it, okay, or wait for a pullback somewhere near the EMA. I would lace this area or the pullback, okay, so here. I said maybe 33% pullback, something like that. I would buy. That didn't even do 33, but look, 79, or you could say 21% pullback. That's all it did. Look, 21% pullback. That green line is actually 21%. See that? Either 21, 33. They couldn't even get to the 33. So what you do is, this is a big disagreement. Everyone is exiting. No one there to sell. Okay, so you just lace this area with buy orders. As it comes down, activates, it goes up, you can cancel this. In this case, it came down to here and went up. You cancel out these two, you're in. And then you buy the strong bull closes. It's trying to go to the open of the day. Or right around here. Could reach that open. Okay, but it's the open of the day's target probably. So this way, if you lost anything as this bar went up and you hit close and took profit, what you do is you enter and you take the loss and then you buy. And this is resistance. This is a trading range high. Deep pullbacks, can they sell again? Could this come down? Remember what I said, right? So they're probably sellers. So I'm going to measure again. You were bearish. Maybe you sold right here. Where's the next one? Maybe right there, right? So, or you sold right there. Somewhere between that and that, okay, is break even. So either there, and originally you sold here, or somewhere here, that and that. These are all break even. So the bears are now selling at those highs and trying to bring the market here. But no one is going to sell until they see a bear bar. But you can see they are selling. So they sold here, they sold there. They get a much better average, but still very difficult. I like to see some kind of a bear body. I don't like to sell bull bars. I've done it many times in my life to add to my losing, so it just compounds. The losing compounds and compounds, and it's never a good thing. It's better to wait, either let it go. If you are still short, wait for maybe the gap bars 50% test, okay, and then sell. Or look for a sell signal bar and then sell as these bulls take profit. But if you have a large account and you don't want to wait that long, and you can actually handle that means you're a strong bear. That means you can sell these areas and get a better average and minimize your losses. So, but you're going to have to do not just 1-to-1, you have to do like 2-to-1, 3-to-1 contracts to get that better average to exit out. So that's tough, but you see how that worked out. This area is a trading range high. So this is a leg in a trading range. It will eventually come down a little bit. Now, other bears will look for a bear bar. Say this is a bear bar, and they're stuck here. They finally get their sell signal bar, and they sell maybe underneath or to close. They're going to wait for market to come down to here. And it might very well get there because you got a wedge here, maybe 1, 2, and 3, 1, 2, and 3. So we could still pull back to the 50% of this trading range. even if we get closer but never touch this area, that's still good for the bears. So I will re-measure that once we get a close. Because if that bar closes all the way down here, that's better. The area actually, although it doesn't shorten, but kind of got the idea. Right now, bears trying to bring market to here. It might take a couple of bars to get there. But I would measure it like this because 40 is where they sold, and then they got stuck. This was a bear flag. They were trailing sell stop, probably underneath 38. Is 38 or 4, doesn't matter. They entered there. This is the bear flag. Therefore, this is their break even. Other bears will measure probably either one tick under or the close. Say the bar closed there, that's going to be their break even. So they're going to hope that the next couple of bars, they can bring the price down. But I see this bar, I'm out. I won't even linger. I hit close. I won't even look at my P&L. I don't care. I'm going to take that loss. There's no way this bar is going to get a follow through. It's going to drift up. I'd rather to buy it and target these gap bars, lower third levels, lower 1/3 levels. Then I take profits, or if I'm smart, I am counting, right? So first of all, I'm not going to start counting. I'm going to count from here because all the way down here it was bearish. Bulls start to show up here. So I'm looking for a 20 point or 21 point, but that's about it. Here is 20 point. I could take profit either at the 20 point, or I could look for that area to be tested, hold it maybe up to 21, but I'm out. Maybe 21.75, but that's it. This is where I would be out. Look, and they close a really nice bar here. That's profit taken at 20 plus. Now, other bears, if they sell and say they entered market under 40, they want market to come right back to the low of yesterday once again. So they're hoping is if they sold, if they were in with one contract, they now enter probably with 2 contracts because they know this is a strong bull leg and they don't want to break even right there. They want to break even somewhere in the middle of that and that. That's because if they have one contract, they sell with 2 contracts, they get a better average. But if you only sell with one contract, then this is your break even. And market may not get there. So watch out. So we're sideways now. All right, let's take a look at, see what's happening here. This could be us. So it's coming down. And we could be in a sideways for a while. Bears are stuck. They're trying to bring it down to the 50%. But this is where I would be like, heck, I'm selling with 3 contracts. I'm in one contract and this goes against me this much. I'm not going to be stupid and do just one. Oh yeah, it's probably going to come down here. Oh, I don't know that. Not against. Look at this gap. Bulls probably want a new high and a new high. I'll sell with 3 contracts. That means I probably already broke even with 47. I'm already done. Probably not. It needs to come down a little bit more, but it's going to lower my losses so much so that it'll be a lot more easier to stomach before this goes back up. So there's that. And if you don't have that kind of a power, you simply exit, buy, and make your money as this goes up to the trading range highs. Okay. If you don't have that kind of a power, you simply exit, buy, and make your money as this goes up to the trading range highs. Okay. Can the market continue to sell? Let's see. There's a wedge top, sells. No, that's not us. There we go. So we have a micro channel here. Ended up being a wedge. They went above, but we didn't. And then we made a new low, then sudden breakout. Sudden breakout. Then the bears are still trying to sell. I I don't think we're going to be able to reject all of this. I don't think that's the case. I think the bears are still trying to get a break even. They're trying to get back to the EMA, but breakout, follow through, more follow through. There are buyers waiting at these lows. Buyers are even waiting there. So you see how difficult it is. But we get a second bar like this. Many bulls will exit probably like 2, 3, 4 points below 40, 46. That could bring us maybe leg 1 pullback, leg 2 to the EMA. So anybody sold here, sold the close. Maybe they have a chance to get to the break even with one contract selling up here. It is possible. Because it's a trading range, it's trying to test the midpoint of the trading range. How do I find the midpoint of the trading range? Like this. I find the last close, bar close. This is the highest one. To the last bar close to the lowest one. So yeah, it seems to be that's the midpoint of this trading range. So market could come down there. So we have 2 bars. Is one of them closed a lot decent than this one, 46. This could be a pullback and a leg down, another leg down. And that's what the bears want. Or we could get a 3 small legs, leg 1 pullback, leg 2 pullback, and leg 3. Because think of it this way. This is up on this, down on this, up on this, down on this, and up on this. So the third leg in this bull channel actually started here. So that's the first target. And we generally come down there. And we pull back. We could come down to the second leg 1, pull back, leg 2, pull back. Leg 2 starting point is here. And we could still come down there with the third leg. So this is the first leg, pulling back. Bears probably want a second leg down and a third leg. Could get us to the 44 lows. So I think the bears do have a chance here. This is the 50% of, and this is the break even. Look, it's almost the same area, pointing to the 44. So you see, it could work out if the bears can continue to sell. First takeout, test the 45 low. If you don't believe me, then go to a smaller time frame and you'll see the legs a lot more clear. Leg 1, pull back. Leg 2, pull back. Leg 3. Leg 3 starting point is 111 low. So we're going to test that. Then we're going to bounce. And we're going to probably come down to the 108 low. So even if we don't come to the 108 low, this is the area where bears seem to push the market down. All right. You all have a great day. I will see you guys tomorrow. Thin fair weather comes in the morning. And then I come back in the afternoon. Bye all. Beige book 2 o'clock. So there's just about 33 minutes left for that. And then, okay, bears are still trying to break even. Still room, leg 1 pullback, leg 2. We're probably going to bounce at or below the EMA. There's also a small head and shoulders here. Okay, with a neckline. If we break this, we're bouncing right now, but if we break this test, that'll give you the third leg down. It's right now bouncing from really terribly drawn neckline there. But here's your neckline. Okay, but we break that neckline. Okay, so pattern recognition, believe me, it's there. Okay, so it's bouncing because it's so bullish. We tested, we came very close to the 111. But why didn't it come all the way down? What's the deal, O'Neill? There's a breakout, right? So all of these are problematic. So it comes as close as possible and then bounces. But if it breaks, Then we go back and retest. That gives us leg 1, pull back, leg 2, pull back, leg 3. So I'm going to expect for that leg 3 and leg 3 to test at least 111 low. Why 111 low? Right? Here's a breakout, pull back, maybe even 110 and maybe 111 open. So we should get here, and that happens to be very close. So I'm expecting another leg down. And you can see it, right? So leg 1, pull back, leg 2. I would love to see that retest, break and retest, and leg 3. So this is the target. What if we don't break? Well, 48 didn't break, but it closed bearish. And it probably is going to come down. You can see the head and shoulders. They still, at least they want to test the 45 low, because that's the final third leg starting point. So market generally gets there. That's the minimum requirement. So there you have it, it's reaching. But it could bounce very quickly from there. Okay, I am very tired doing all this talk. I will see you guys tomorrow. The session is recorded and will be posted soon. You can rewatch. If you have questions, send me private message. And then I'll see you guys tomorrow. Bye, everyone.